Mining red flags, big risks for mining stocks, crashing mining stocks, potentially talking about some of the old scams in the business. And I'm hoping some more positive stuff here today, Luke. But this is a lot that we have to go through today. We have Brian Leni of Mining Stock Education joining us, and then later on in the conversation, I am going to have Alain Lambert. He's the CEO of PRISMO Metals, and I'm going to talk about his story. He's got a long past in the space, so we'll go kind of uncomfortably personally. I don't know how to say this. We'll go in depth on his personal situation and see what he's made out of. But of course, not before you've paused the screen and read the warning that you're seeing right now. You're actually obligated to read it, but you're also just advised to do so. And this is the first and last advice that you're going to get in this video, because this is not just some disclaimer. This is an actual warning that will help you not lose money, which losing money, by the way, is the norm and should be the expectation in the sector, as you're going to see as we move forward. But also, I want you to know that I am here to make money. I make money from the existence of this YouTube channel. I make money by conducting these interviews, and specifically from the companies paying for the production of these interviews. So the guests, so Luke obviously is not paying for it. Brian's not paying for it. But companies do pay me to produce these interviews, do the research, shoot it, edit it, put it online, follow it up, and all the other steps that we do. But in this episode specifically, PRISMO Metals is a paying client of Resource Talks. And so that means that you should look at this episode, just like all the other episodes and everything else that companies put out there. You should look at everything as marketing. So start by understanding that most company communication online it could be interviews, it could be presentations, or it could be your favorite quote unquote analyst talking about it. All that is marketing. And I don't make bias or recommendations on this channel, because there is a clear conflict of interest, in my opinion, when you take money from the companies. That there is a conflict of interest to then make buy or sell recommendations. Many out there will still do it, and you should be aware of that inherent bias. That bias is not always going to be clearly disclosed. So it's safer for you anytime you're watching any type of company-specific content, wherever it may be, or whatever platform, just approach it with a healthy dose of skepticism, which is typically a lot of skepticism, and treat it as marketing. That's it. So understand that there's going to be no guarantees. There's going to be one guarantee. The only guarantee that you're going to have in this video is that there are going to be forward-looking statements in these conversations that are general and impersonal in nature, containing hopes for the future. And those are events that may or may not take place depending on many different factors, both within and outside of the company's control, but nobody knows what's going to happen. Nobody knows where the stock is going to go. Be aware of that. Be aware of the inherent risk to investing. There's a risk to investing, and there's an increased risk of investing in non-revenue generating companies that operate in the harsh reality of the mining industry. And please talk to someone who's proven to know what they are doing and what they're talking about, like a professional investment advisor. Talk to a licensed investment advisor, as well as do more research before taking any decisions in the end. And you can do your research. Well, really, where you do your research is definitely not on YouTube, and most definitely not on Twitter or any of the other websites besides setterplus.com. That is where research happens. That's where you're going to find the official company filings. You want to read through the management discussion and analysis. That's the MD&A. You want to read through the financial statements. You want to read through the management information circular, and hopefully you're also reading the technical documents, the NI 43 101s. If you don't do that, you are highly likely to lose your money. Be aware of that. The disclaimers on your screen right now. Again, I'm going to try and shut up now. If you don't enjoy losing money, read them and be careful out there. With all that said, Luke, what I'm looking at here, what you've sent me, is an overview of the movers. The first company that you've noted on here is called Giant Mining Corp. That's what it's called now. Apparently, it's got quite a few name changes. Ticker symbol was BFG. It's gone up almost 300%. So it's 4x'd since this week, really. So this is the first time I'm hearing the name. I have no idea what they do or whether what they have is any good. But I did notice that first of all, they're not giant. It's a relatively small cap. And second of all, they're not a mining corp. It's more of an explorer co. So I want to start off by trying to be funny and saying that. But I suppose it's good to have large goals. I try to have those as well, especially when they're coupled with a large, when they're not coupled with a large number of shares outstanding. This company only has 3.5 million shares outstanding, but by the looks of it, they might have had well, at least I'm hoping they had a stock split because or reverse stock split because the stock hit a high in 2018 of, and I hope I'm not reading this wrongly, but it's almost $3,000 per share. So three with three zeros. So again, I'm guessing you're at least hoping that they did a rollback, but it's gone from, again, $3,000 at a certain point, whatever, a couple of years back, to 50 cents, half a dollar. So from 3,000 to a half. And now it's back up to 130. So I'm getting a little bit suspicious. I'm seeing some name changes, but it is you bringing it up. So there must be something going on. Talk to me. What is this? Who is this? What's going on? Why are we talking about it?
Yeah, well, first of all, of course, it's the winner of the week, the number one. And I noticed this company a couple of months ago for the same reasons I often talk about, indeed, rollbacks and debt settlements. It caught my attention. I only found out this week when I started looking into it for the show, really, to talk about it, that this is actually a company that was related to Bridgemark, one of the big mining scams a couple of years ago in Canada. I don't want to suggest that this is a scam right now because I don't know, but it has still a couple of the same practices. At the time, the company had a number of names already in the past. It started, it IPO'd as New Point Exploration, and then it became Copper Point Ventures, then it became Bam Bam Resources. I think at that time, for sure, there was a bit of a Bridgemark connection, and then you had Mayuba Hill Copper, and now it is Giant Mining. So 5 different names in 7 years. The market cap is not completely right because they recently added quite a number of shares again. They rolled back 1 to 20 recently in April. That got them back to 3.5 million shares. They did financings and debt settlements. So right now they have, I think, which is not included in the list, I guess, about 23 million shares out, which makes the market cap closer to 35 million.
Oh, okay.
But it is a typical Canadian story. Well, not a Canadian story. A typical sort of junior mining story reset. When a company fails, often a rollback is done. New management, new team, new logo, new company name. But this is a bit of an extreme one because they listed at 11 million shares out. The IPO was at 10 cents. If you actually did buy the share at 10 cents at the time, you have a cost basis of $2,000 per share. And it briefly traded at $6,000 per share. And of course, you never see that. The only reason that it's like that is that because they did a rollback to 1 to 10 in 2019, then they did a 1 to 10 in 2020, they did a 1 to 10 in 2022, and they did a 1 to 20 this year. So the stock has rolled back so many times that if you paid 10 cents, you actually paid $2,000. So you're waiting. You're waiting for a $2,000 share price to even get your money back if you did the IPO, which in a way is ridiculous. In the other way, we know that it works a little bit like this in this business because they print shares like crazy to get money. Everybody wants to gamble on the next big story. But the problem is in this company, the project is still the same project, and I'm not sure if it's not interesting. It seems to have potential. If you read these news releases, it's quite interesting if you read it. But on the other hand, they are, looking at this project for 7 years in 5 different company names with 4 rollbacks. So can you really trust this? It's really, really tricky. If you look at the financials, they spent about $18 million in the last 7 years just on consulting, investor relations, and professional fees. That is not including rent, travel, filing fees, G&A. Just $18 million on consulting, investor relations, and professional fees. Last year, this was about 2.5 million. So really, I really expected this to happen a little bit because when I looked at it in April, I saw all these things happening. The rollback, name change, new names, all these typical things. But it's such an extreme way that all the old shareholders were wiped out so that you can really start over again. So the 3.5 million shares that were left outstanding in April are currently only 15% of the complete structure. So the 100% of the shareholders half a year ago control 15% of the company right now. So it's really really suspicious. Let's put it like this.
I don't know. I'm looking at the people involved. I don't know any of them. So I really have no idea what's going on here. But I do think that this is a good reminder of what our space really is, and how badly things can go. Where you're buying at $2,000, the equivalent of $2,000, and then after rollback, it falls to 50 cents. These things, like this is a space. That these things happen in the space. People should know that it's not. Oftentimes, and maybe we should talk with Brian about this, but oftentimes we talk about flowers and roses and the good stuff that happened and a good 10x and everyone's chasing that. But these things happen as well, potentially more often. Haven't ran the numbers, but they happen often. And it's also a good reminder, I think, to look at the as you just mentioned, the financials. So the official filings. I always say that in my disclaimer. People think it's just a disclaimer. It's not. There's, you go on setterplus.ca. That's where you find official filings of companies. There's a couple of main documents that I typically go through. One of them is the financial statements. The management information circular is where you see how much money management's making. And then I also go through the MD&A, management discussion and analysis. If I typically discuss this with geo friends that I have, but I go through the technical reports as well. And I read them, and a lot of people say like, "Oh, well, how could I have known this was happening or whatever?" And the answer is the company will literally tell you. They are obligated to tell you, and they will in their official filing. So it's a good reminder of what else can happen and what can go wrong in this space, and how you can kind of prevent it is by reading these things and understanding them. When I do company interviews, I kick them off with a company overview, which is just me going through some of the numbers. And I make ratios. I like making the exploration to administration ratio to see what percentage of the money that they spent during a given period went into the ground, and then split those two things. So when you're looking at the exploration spend, how much of that was actually drilling and assaying and geophysics? How much of it was consulting and other stuff that might also be related to management? And the same thing with administration. How much of it was paychecks? How much was it? How much was advertising? How much was marketing and IR, and so on and so forth? So I think it's a good reminder. And oftentimes I would think about these things like I at the beginning when we started doing these, Luke, I was thinking like, why is he even bringing these things up? And so number one, it's because it's a mover. This is the point of this show, is to discuss companies that have moved in a given week, not companies that are great or should be buying or anything among those lines, or should not be buying, staying away, whatever. It's just companies that have moved. Why did they move? And what's kind of the underlying lesson, or what is there to be taken away from that? That's kind of the whole point of the show. And the last thing I'm going to say is that if we're making mistakes on anything, and even if you're from the company watching this and you want to explain something, send me an email. It is antonio@resourcetalks.com, and we'll figure it out. We'll get you an interview, or we'll correct whatever mistakes we might have made in a previous show, or comment in the comments below. This goes on social media as well. People can see it. So just let us know when we're making mistakes. We're definitely not infallible. So those are a couple of the points that I wanted to make. And this is a good point that you mentioned on IPOs, by the way, because this is oftentimes, I think, the reality of IPOs. And the TSXV seems to be struggling. If I'm to believe, I saw something online. I don't remember who posted it first or whatever, but I saw that TSXV IPOs are very close to an all-time low, or were over the last couple of months. So that might be a good point to talk about next week. Next week we're having John Goodman from Dundee on, and he knows and understands that market very, very well. So maybe you can talk to him about IPOs, but IPOs are tricky beasts to get in overall. I think that's also another point in here. So yeah, the big Canadian mining reset. I know a guy who maybe can write a sequel to his book and call it the big mining reset, but that's maybe something for a different time.
Can I make one note, because I on purpose I didn't mention names. I'm 100% sure that this was a Bridgemark company, so it was part of the big scam that happened. But in this business, sometimes I feel like scams and the good stuff, things are very close to each other. If somebody takes a big risk and hits it, he is the best explorer ever, and the stock will go crazy. And if you take a big risk and you do promotion, and you're often seen as a very bad manager. This was part of a scam. It doesn't mean it has to be a scam right now. I did see a couple of people were appointed in the last couple of months which I'm surprised of because they have good names. That's why I want to be careful. But it is a fact that this company went from 11 million shares to 66 million, back to 6, then to 50, then back to 5, 193 million shares, back to 19, then to 68. So this company has printed shares like crazy. They have spent money on promotion and salaries, and I didn't even include G&A. I didn't even include share-based payments. Absolutely ridiculous numbers. Doesn't mean that this project cannot have any interest. It looks quite interesting, and they got a couple of good names involved, at least one good name for sure recently. So I don't want to say that it could be behind them. We will see next year how they are spending and how they are operating. They're actually doing drilling right now, is what they say. I'm very, very skeptical, but I don't want to put the label on it like, hey, it is still like this. It could change, but if I were them, I would not do proper exploration in this vehicle, because this vehicle has a lot of red flags written over it. So I want to be careful with saying that they are doing this still, but in the past certainly they have done a lot of bad stuff. That's for sure. This company at least.
And that's part of it. That again goes back to go and read these filings, the official filings. Another one that's helpful is SEDI. So that's SEDI, where you can do. How do you do that? By the way, it's something that I don't have an easy way of doing that. Although I do like doing it, because when I interview companies, the first question that I ask is, when it's a new company, is who are you and why should I trust you with my money? The who are you question is really aimed at them telling me what companies they've been involved with. They are not always going to tell me the good and the bad ones, and definitely most of the times not even the ugly ones. So that's why I ask, okay, what were the 3 last companies you were involved with? Where do you go to double check what the last companies that people are involved with are?
Well, in the last couple of years, of course, mining platforms have been collecting all that data, and that's you can find it on on CDI. You can find it on a CEO.ca by going to their CDI filings. You could see it in several different ways, but I still use Stockwatch quite a lot, because Stockwatch is a site that looks like from the 90s or 80s. It actually never really changed much, I think. Well, I think the previous version was actually more like a 70s website, even though there were no websites at the time. It was really like a bad looking website, but it's an amazing website where you can find history back to 1982, and it gives you a very nice example of all the companies, or an overview of all the companies people have been involved with, and you can pretty quickly find out who they are related to. So like, which person did they work with together, which directors leave when. There's no better site than Stockwatch, in my opinion, for tracing where people went, which companies they were involved in, not just as management team, also if they vended a property to a company, or sometimes if they are just a manager, or sometimes just an employee, not even a C-suite person. In certain, if somebody shows up in one of the documents related to the company, they will be linked to that company. So I think Stockwatch is probably the best site for this. I use it for that purpose. But I should be here promoting my own site, not no. That's they are
Well, do you have
actually
that option?
they are no, they are really. Let me just. They are really. Stockwatch is a really amazing site. Very different philosophy, I think, than almost any other website nowadays. It looks like a very boring, bad website, but it's an amazing database where you can find a lot of information that you need for junior mining investing, I think.
But so I can do that on your website as well.
Oh, you can look at CDI filings, but what they do is they connect people to companies, and they make a very simple overview. So you can click on a person and see all the related companies, but you can click on a company and see all the related all the related persons. So it's very clean. It's really like, looks like I said, like 90s style, but in this way, it's quick. It's clean, and it's very simple to use once you use it for a while. I mean, in the beginning, you are searching. They have many different things hidden behind certain buttons, so you have to really know how to operate the system. But once you know it, it's very efficient, in my opinion, for these purposes.
Okay. Yeah. Well, it'd be kind of cool. I know, like, making these charts, if you could kind of have it on a chart or something, where you can see like a name of a person, and like on a year per year basis. You can see the companies they were involved with. Sometimes it's 1, 2, 3, 4, 5. That's another thing that I like asking, because is this your only gig that you're doing out there? And if you have 5, that's fine. I don't know how many hours people sleep a night, but how much of your time are we getting into this one? And so that can also be helpful, just to see kind of the position. Yeah, do you have like a visual overview of this? Would be helpful, I think. Yeah.
You mean
Anyways,
a visual overview of people involved in the company? You mean?
just no per name. Like I wanna look, I wanna look up or whatever. I think you're gonna have to go in a couple of minutes, so you're not gonna stick around for my interview with Alain Lambert. But you're like, I want to check him. I want to check him personally. Like, what has he done? And so kind of make it searchable by name or something like that, where I can go in, type in, oh, Alain Lambert, and then I can see 2010, 5 companies, 2011, these 3 companies, and or whatever it might be. So
Yeah, and I'm looking at it right now. So on Stockwatch, you can click on his name, and you see probably at least 100 affiliations to his name.
okay.
So
But can you?
Prismo Metals. He's an investor in a French name, Conseil Final, and La Société de Placement, Grand Tour. I mean, everybody who's French, excuse me for my bad French, but he was involved with hundreds of companies, disclosed as a shareholder, disclosed as a director, disclosed as a vendor. So he certainly goes back a long time, and his first connections are in 1987, and there are 6 of them that have no date connected to him. So that's even before 87, I think. So he has a long, for sure, a long track record in mining. That's for sure.
Yeah, I don't think I think his background's actually not in mining. But anyways, I'll talk to him. The point here is that it has to be kind of simple. I cannot use Stockhouse that well. Maybe
Stockwatch, this is.
Stockwatch. That's it. I cannot use it that well because of how the website is, and also because I'm probably a little slow myself. But yeah. Anyways, it'd be cool if you can have a tool for that. What else is on the list of movers here? Otherwise, we'll spend too much talking about mining platforms, which is also a cool podcast in and of itself. You have, let's see. Oh, you have GFG resources on here as a mover. Ticker symbol is, of course, GFG. I interviewed the CEO last week, and apparently that means gift from God. I think someone thought it meant go for gold. Something along those lines. Anyways, they drilled almost 14 grams of gold over 7.1 meters, so 14 grams over 7 meters. Stock almost doubled, up about 80%. And I talked to our CEO again, Brian, thinking about giants here, but Brian Skanderbug. And apparently they need to understand the metallurgy here first. Although this looks like the beginning of something, is it something big? Is it continuous? Can it be extracted with a decent profit margin? All questions that have not yet been answered. And then some. It also seems like the structural controls on the project might not exactly be what they previously thought they were, because this high grade came as a bit of a surprise. I know they'll have to potentially chase the mineralization in the footwall here and stuff like that. And so again, I spoke to him for about 75 minutes or something when those lines. So I asked many of those questions, but yeah, I saw the market like the news. What did you think? Why do you have it on here?
Well, I realize I often do a little bit of more anecdotal than I'm not somebody who will explain the complete geology here, for sure not. But GFG is I think a perfect example of how extremely difficult, again, this business can be. I owned it. I lost money on GFG a couple of times. They had a pretty interesting project, Rattlesnake, and they had a deal with Newcrest on it. Newcrest was optioning in on it, and those results were very disappointing. And the stock went from 40 cents to 5 cents or something in a very short period of time. And Newcrest then backed out of the deal because the results were not as expected or hoped for. And then the company sort of got new interest again. They also had a project in Ontario, which was very early stage, but very promising. So the company had a couple of other projects at the time as well, and then a stock goes back from 8 cents, 7 cents to 30 cents. So you can see the multi baggers you can make in a very short time without really apparently having enough value behind it, because the stock then again went back to 5 cents or 4 cents. So I think it's an example is where they really had, in my opinion, a tough time raising money. They raised money at 14 cents and they raised money at 11 cents, and I think often about how much of a struggle it must be to every time finance, get your word across the line again, like, hey, we've got something very promising. And if you look at this chart, gradually going down, spike up and down, and spike up and down again. As an investor, but also as a management team, I can imagine that it must be tough over so many years to hold a stock. And that's why holding a stock is in most cases not a good idea. And then just one news release can completely change everything again. And not suggesting that this is the complete game changer yet, but it is something. This is the first time that they have surprised me so much that in the market, I guess, that stock really jumped. And is this another example of a jump followed by a slow death until they are at 5 cents again or 10 cents? We'll find out. But it shows that it's so difficult waiting for drill results, hoping for something good, and it's almost always bad. And the market is disappointed again. So I found it a little bit anecdotal that this company, is around for so long, didn't change name. I don't think they rolled back. It's still around, but with quite a bit of shares out, and everybody, you still have to have some hope, and you still need to dream a little bit as a management team to continue to keep faith in your projects, right? Because if you're doing this for 5, 6, 7 years, and your stock price is only going down over time, then you every time need to get people excited about your story. So I found this one quite interesting because I sort of lost faith in it, and then suddenly they come with this, which is not the best intercept ever or something, but seems to be promising at first sight.
Yeah, and they also did a warrant repricing right before that, so people are not too happy with that. I asked Brian about it as well, and these it is a messy venture capital sector, although it is probably one of the better venture capital sectors out there, where it was like if you compare it to crypto or whatever, but it's still messy and still venture capital, still non-revenue generating companies, and there's still a lot of room for mistakes. And so I think this overview so far does a good job of highlighting that. Yeah, I'll be following along with GFG, hopefully get an update later on and see how they can follow up the geology here. But certainly is interesting. The market likes it, and it's hard to get the market to like anything in this environment, it seems. So the market did like South Pacific apparently for no reason, because there's no news that you've noted on here, but they're up also 80%. It's a bit of a larger company too. What's although not a lot of volume, what $140,000 volume pushed it up 80%. What do you think is happening?
Yeah, and again, we always talk about these. We never talk about the snow lines, right? Maybe we should. We never talk about these somewhat more accomplished companies that already have a discovery behind them, because we look at the movers list, and it dictates a little bit where we what we talk about. And it's interesting for sure, because everybody in this sector is looking for big returns. Why otherwise take the risk of all these bad things? I mean, we don't try to focus on bad things and scams, but in a sector like this, you need to consider these serial stock issuers and warrant issuers, because if you just invest in these type of things over a long period of time, you go from $2,000 to 50 cents, as we just discussed. So you need to look at the big winners as well. Otherwise, why even try? And that's why we end up looking at GFG this week, and Giant, and mining, and South Pacific is another example, and maybe it becomes boring, where a company gets people involved. They got Michael Murphy as a new director earlier this year. He's the founder of Torex Gold. But early, if you go back a little bit in time and you go to 2023, you see that they buy a project. You look into it, and it has the signs of, hey, this could be promotional. New chairman, new CEO, rollback, name change, financing, debt settlement, new corporate presentation, and then Michael Murphy comes in, who is the founder of Torex. And at that point, I realized, well, this is probably a buy. Not even looking at the presentation yet. Everybody wants to see a corporate presentation with very nice images, them telling you what they are going to do to make this work. But I think it's often way more telling to look at 5 or 6 or 7 events that tell you, hey, something is happening. And you could easily have bought the stock at, I wouldn't say 20 cents, because then you would really have been bottom picking. But when all these signals came out, you could have bought it at 25 cents for sure, because I was looking at it at the time. And right now it's a 70-cent stock. And so you don't have to make a discovery to have a double or triple in a very short period of time. Which again, every time these companies come up in our conversations, and I think it is because the opportunity lies in that very early stage, of creating these companies, assembling these companies. And giant mining, the company we discussed first, is absolutely another assembly. And that's why I think the good and the bad are so close to each other, because if you want to do a proper job, you have to clean things up and get things going, either in an IPO, which is completely clean typically, or an RTO, where you indeed roll back, get new people in, and take something over. And the bad people, I mean, giant mining in the past was certainly, bridge mark related, so bad people, let's put it like this. They do the same thing. They clean it up and promote the story. They may not do a lot of good work, but they at least promote it like crazy so the stock can go up. So we will come across good companies and bad companies in this list. And South Pacific comes across to me as a real company trying to find something. But in a way, is doing the same, right? Rolling back, new people, new promotion, new presentation. So the same steps as a bad company would do. The only difference is they use their capital to actually drill holes, and the other company used the capital to promote and send out a lot of promotional stuff. And sometimes it surprises me how effective it can be, because a couple of $100,000 of promotional advertisement and YouTube videos and German promotions can cause a stock to go up 3, 4, 5x, which surprises me still after so many years.
Yeah, it again does a good job of highlighting that this is largely a non-revenue generating sector, but capital intensive, and it's tough. For someone going into it, it's important to understand the risks, but it's important, I suppose, to have vision as well and understand where things may go and have that hope, I suppose, but not with next friend's money. That's kind of how I look at it myself. Although I might be a little less responsible, or have been less responsible with my picks over the last couple of months. There's something positive going on in your news overview this week, though. There's not a lot, but something. Or at least I hope so. Lucara Diamonds found a huge diamond apparently. Why do you have it on here? We've talked about diamonds a couple of times. What are you seeing it in?
Yeah, actually, I was about to give it a negative spin here, but let me try to find something positive.
There's no option. That's it. You gotta come up with something.
No. Actually, I am very positive, and even when I look at names like giant mining, which I of course have talked about in a bit of a negative sense, I look at these things as opportunities because this is such a risky business that you have to, if you only think about how much is wrong with the sector, why not leave it? I think you can try to improve it. I mean, talking about it is one thing, regulators do the other thing, I guess. But I look at everything from a positive point of view, like, can I use this to my benefit? I find it a fun game, but my junior mining is in a way a game because you place bets and real geologist scientific work is involved, but it leads often to losses. Most companies will lose and will go down 90%, and I think I'm not trying to be negative by pointing it out. And in the case of Lucara, it's pretty amazing what type of diamonds they find there. But if you think about diamond industry, it's very difficult again to make money in diamond industry. Find me one diamond stock that made any money over the last couple of years. Last 10, 15 years was my sort of idea to talk about. And these diamonds are always mined, almost always in very remote regions, either in the north of Africa, or in the north of Canada, or in Africa. And the demand is really driven by luxury markets. But nowadays you have also these artificial diamonds. So supply chain is fragile. Also ethical concerns about, do we really have to mine these things? I think the last real mining or like diamond boom was in the 90s. Will it ever come back? I wondered. So I sometimes meet my diamond companies. I always find it fascinating, but difficult to invest in. Even more difficult than other metals, because Lucara finds this amazing diamond, but it's also a bit. Sometimes they don't find something like this for a year, and then they surprise the market again. And of course, in the meantime, they mine other diamonds, less impressive diamonds. But it's so hard to consistently make money in a business. Normally, what you want to do in a business is grow it and sustain, make cash flow every year, and return money to the shareholders who take the risk. And in mining, it's almost the opposite. Most companies never give you money back, and even more so in diamonds, I think. So I found it very fascinating. It's beautiful, but as a business, extremely difficult and so depending on cycles, I think. mining in general, but diamonds even more so.
Definitely. That's been I've just largely ignored diamonds outside of just regular curiosity that I've had for it. But and I really wrote down three things. But bigger isn't always better in diamond mining, or in diamond selling. Really, they can be smaller diamonds, so size doesn't matter after all. At least that's what my wife tells me. But there's also vague pricing estimates, right? The diamond, like there's no clear spot pricing or anything like that as far as I could figure out. That is like, you can see, oh, my company found this diamond, therefore they're going to make that much money. Sometimes they can find a huge diamond. I'm not saying it's going to happen because I have no idea what I'm talking about, but I've noticed that they can find a large diamond and end up losing money on it. After all, there's no clear pricing. There's a lot of there's a lot of problems with that, and also the technology, right? I mean, the lab grown diamonds keep on improving all the time. They just keep getting better and better and better. And so basically, for these three reasons is why I've largely ignored diamonds. But again, as I said at the beginning, if we're missing something, if I'm saying something stupid, which I do at least a couple of times an episode, at least a try. So let me know. Let me know what I'm missing out. And if you know someone who's going to want to talk to us about diamonds, we gladly do that. So yeah, I have Brian waiting in the waiting room. Luke, do you want us to let him in, or anything else you want to add here at the end?
I'll let him wait for a while. Let's just take a moment of silence and think a little bit about our lives. Now let's get him in and talk a little bit more about junior mining, which in the end is still super exciting. Otherwise, we wouldn't be around for so long. But it's important to also look at it from another point of view of risk.
Right, Brian, I want to make this into a bit of a different conversation here. Maybe less rainbows and butterflies later on, because there are a lot of emotions in the market right now, understandably so, as I think most people are in the red after what's been a brutal couple of years here. But it is your first time on Research Talks, and I know you've done your story before in other places, but introductions are still in order. So tell me, who are you, and why do you think you're worth listening to?
Thanks for having me, Antonio and Luke. So my story actually goes back a number of years. I'm an engineer at a school. I was working in pharmaceuticals of all places. I didn't have any money in the market, and I started dating my future wife. And I remember the first time I went back to her place, her brother had flown in from BC. And so I was meeting her family and her brother for the first time. And her brother and I kind of went off to the side and had our own conversation. And he was talking about gold, and he was talking about silver and libertarianism and Doug Casey and a number of different things, Rick Rule. And I thought to myself, oh, this is interesting. Even though I'm an engineer, I've thought about metals and stuff like that. I never really thought about precious metals and what that means in any regard. And so I started going down the rabbit hole, and thinking about monetary policy, thinking about bullion. And I made some investment. I bought some bullion, I bought some silver. And from there, I think when you start going a little bit further with it, invariably you hit the junior mining stocks. And so I was making some money out of school. Pharmaceuticals was a really great place to be. They basically given blank checks from these pharmaceutical companies to make equipment. And that's where I was operating. So was making good money right out of school. And so I started putting some money into the market, and looking back, extremely blind to how the market works, especially on the junior mining side of things. From there, of course, there's a lot of things that happen. So that's like 2007. You have the 2008 crash. I didn't really get affected by it. I had a little bit of money in the market, and I was in and out, and I didn't really know what I was doing. Leading up, obviously there's a lot of money made leading up to 2011. And I, again, didn't really participate on the upside or the downside of it. But I knew more and more that this is something that I was really interested in. And of course, the gold price kind of plateaus in 2011. And in 2013, I made a big, bold decision at the support of my wife to sell our house. And then we used 2/3 of the equity to deploy into the market over the following couple of years. And so I had isolated a few companies that I thought were decent. And I got lucky on a few of them. Reservoir Minerals was one of them. It paid for my house, or not paid for the whole house, but paid for the down payment on my next house. And a number of other companies helped me escape the 9-to-5 career and go after investing full time. So that's sort of my story in a nutshell, and sort of the ebbs and flows. And of course, the last 8 years that I've been an investor full time and private have been a huge learning experience, especially when you try to make money solely from this sector of the market. And so for, I guess, for why my voice might be important, or why I think people should listen, I think my story reflects a lot of what a lot of people will aspire to do. And so from one side, I think if it can give you some aspirations to take a little bit of risk in your life, I think that's a good thing. It doesn't necessarily mean that it's in the resource market, but maybe it is to start your own business or do something on your own, take that risk and put yourself out there to be successful. And of course, it doesn't always happen. And I do think there was a little bit of luck on my side. But I can tell you, watching the portfolio fall like it did from 2013 to basically 2015, being down that much and that reflecting basically all of my wealth, was not easy. But 2016 again was an amazing 6 months, I think it was, and allowed me to step out. And so the education that I've got over the last 8 years doing this full time, my analytical background as an engineer, and my success that I've had over the last eight years to propel myself forward and stay independent, are the reasons why I think my voice is worth listening to.
So you sold your house in 2013. Around that time, I took a loan to invest in junior mining, which was not smart, I think, but selling your house is another thing. How did that emotionally work out in a bear market? I mean, of course, now looking back, it may be a success story, but I can also imagine that in the years following, you had a lot of doubt about that decision.
Oh, it was tough. And it mixed in the fact that so from pharmaceutical, when I did pharmaceutical for about a year and a half out of school, and then I got into steel manufacturing, which made me move cities. And my wife, she wasn't my wife at the time, but she came with me. So I started in steel manufacturing. It was a great job, especially in the beginning. From a technical standpoint, I was a process engineer on the floor. I actually really enjoyed it, making improvements on the process and this or that. But you mix in, so I was making pretty good money. Even though we'd sold our house and the portfolio was going down, I felt fairly secure that my job was going to be there. But then what would happen is I started hating my job, and I took promotions to be a manager in the rolling mill, and it wasn't what I thought it would be. It was more money, but it was more time in a boardroom fighting with the union or fighting with somebody over contracts or whatever. And so, yeah, when you mix in the fact that your portfolio is down, I think minus 36 or minus 35, I can remember. Yeah, it was pretty tough, but I did have that steady paycheck. And so I would say, and it was probably a lot better than the average Joe out there. So I think it's sort of balanced it out. But I can tell you, like in 2016, I made a bunch of money. My portfolio went up, let's say around 300%, but it was still a lot less money than I'm sure people would leave their career, a good career, in to get away from it. And so I was really motivated. And, in fact, I don't think I would have left if I didn't hate my job so much. And so it invariably ended up being, let's say just on the financial career side, the best thing that's happened is to make that jump. So
How much money was that?
I'm not going to disclose that, but what I say, it's probably a lot less than people think. Like it definitely wasn't. Yeah, no, it wasn't as much as people would think.
I like romanticizing about that. That's I'm kind of in that stage of my life where I'm romanticizing of what is it going to take for me to feel more secure, I suppose, and make that kind of a jump. Although I'm luckier than that. I don't have to make that jump because I do what I love for a living already, which is literally talking into a microphone, which makes me rethink my life. But anyways, what have you done over time in terms of profits and losses? Are you tracking that? Do you have a P&L or a CAGR or just an overall return that you can share as to, I was here and then, several years later or whatever, would you say 2007? So it's that's over 15 years, 17 years, I suppose.
Yep.
How much are you up?
Yep. Okay. So I have I don't have the straight numbers, but I know I can do it roughly in my head. So if you go back to 2013 to today, let's say 2013 to 2 years ago, I was up around 13 times my original. which I was extremely happy with. The last 2 years, I probably came back half that. And yeah, no, but that's reality. And there's a couple of mistakes that I made myself, and it's really directed me to where I am today. Now I haven't redone my numbers because Q2 was exceptionally good for me. There was 3 or 4 ideas that came together finally, and I've made some of that back. So it's probably closer to 40 or 30% from that 13x. But yeah, that's the reality, I think, of this business, and especially what a bear market can do. Even if you do make the right picks, because I don't think necessarily where I lost money was that I made these horrible picks, but it was sort of situational and reflective of some of the things that can come up with investing in junior mining companies.
But so wait, so from 2013 till 2022, then you were up 13x. That's 33% CAGR, spectacular. And then you said you gave half of that back for a while, so let's call it 6. But it is 6.5 now. So now it's 11 years later, which is 18% CAGR, which is also spectacular. So, but do you still think it was worth the risk? Like you could have. I get that comment a lot
100%.
actually out there. Like you'd have literally just bought Apple and Microsoft, and you would have outperformed that.
Yeah, but everybody's different, and I think this is the stuff that interests me. I'm not that interested in tech. All I do is junior mining. Yeah, I could invest in all that stuff, but it just doesn't interest me. I think the mistakes I've made, where I've maybe lost money, even when I made money, like that 13x on the initial, I could have done so much better if I would have known what I know today. And so I don't think you can necessarily, like, this is the thing, is being an investor, I don't think is like a 10-year thing. Like it truly is like multi-decades, because you have to go through these ebbs and flows and learn how portfolio allocation, and especially the junior market, how cyclical it is, where money has to be taken out, where it has to be put into real things, instead of just reinvested into the market. And I am so well suited for what's ahead, given what mistakes and successes I've had in the past. And so I don't think I could be here today at this point without experiencing all that. So it was 100% worth it, changed my life, and has allowed me to, I know, help other people along the way too with the stuff that I've done right and wrong.
If you look at, I mean, the question that Antonio did about Microsoft and Apple is interesting, because I also think about that a little bit recently. And do you think that most people, and maybe yourself as well, of course, that they stay around in this business to get that? I mean, you have amazing returns, but what is the reason people stay around? I mean, stick around in this industry? Could it be that people dream about having this great bear position at 15 cents and sell at 30, but then with 20% of the portfolio? Is that the attraction? What people, because everybody wants to make money in this business, and everybody, I think, dreams of making very big money. Is that the thing? Or if you look forward in the next 10 years, you would be happy to do this again? What's your sort of dream or your idea in terms of making returns in the future?
So first off, yeah, I think 10 baggers, the blue sky is what attracts everybody. I think a lot of people, the vast majority of people, the only people that can stay are the ones that don't get blown out. And I don't think that's the majority of people. I think a lot of retail investors make some big mistakes, blow themselves out, or they lose enough money to say, hey, like I can't do this anymore. I think the guys that stick around that are actually making money, I think that it's such a niche part of the sector that you gain so much knowledge. The network of people that I think is quite small, and so you've got a tremendous advantage over the rest of the market, just given that. And so I think if you're able to last, you're able to make some money, and you're able to last, that first decade, your best decades are probably ahead of you in terms of what you return. And so I don't target 20% or 30%. I just try to make as much money as I can and make the best investments I can for the lowest risk I can. And that is tough to do in the junior sector. But I think my approach, that has definitely been, narrowed, is a good approach, and it's worked for me.
Well, if given that it is work for you, and again, this is at a certain point it was 33% CAGR. Again, that is spectacular. To me, that sounds like I often joke about this. I often joke about in my disclaimer, I say you shouldn't listen to me. I don't know if the stock is going to go up or down or circles. And I also have no track record to back it up. If I knew what was going to happen, I wouldn't be making videos for a living. I often joke in my disclaimer about that. What about you? You have a newsletter that is a paid for newsletter, but you do 33% CAGR. Why not just live off of the investments and forget the business side of it, or dealing with investors?
Yeah. Writing has been probably my biggest strength, or my biggest help in how I invest in the market. If you cannot explain to somebody why you are investing in this or speculating in a certain company, then you probably shouldn't be investing in it. Having the attachment to an audience that's reading your work on a weekly, monthly basis, whatever that may be. If you hold yourself accountable to that and you have to justify why you're putting the money in, I think it just makes you that much better of an investor. And maybe writing isn't everybody's bag. Maybe just talking about it is what you need to do. And that works. I know people that learn and form ideas in their head just through talking. So maybe you need to, I don't know, necessarily start a podcast. There are a lot of them, but maybe even just, recording yourself and show it, or get someone to listen to it and see if they understand why you want to invest in this company, what your angle is. Do you know the value of it? Expiration, of course, is, anyone's guess, but if it's a developer or it's a producer, you should be able to come up with some sort of valuation where the company is and where it should be and how it's going to get there. So if you can cover those 3 points and someone that, like the layperson, can listen to and say, hey, okay, I basically understand why you're investing. I think that's a big point. And I think too many people can't do that or don't do that. So the newsletter for me has definitely been a check. And I've still made mistakes, but for me, it's still a check on being able to explain to people, hey, this is exactly what I see, and what I think is going to happen. And I've just been probably right more often than wrong. And then you get to portfolio allocations, and that's where one mistake and amongst 10 can really kill you. And so you want to make sure that you've allocated properly so that one mistake doesn't blow you out. And that's just my perspective. But
yeah, and just to clarify, please no more podcasts, people listening. We have plenty of podcasts in the mining space. We don't have that many. I just don't want any competition anymore. But you're right.
Do you ever need any help yourself? Like, are you following other newsletters to generate ideas, or do you generate every idea yourself? Is it almost something that you want to do just to keep your own pride, basically, or could you take somebody else's idea over and take it into your newsletter or your own investment?
I don't follow any other newsletters. There are certain people that I'll listen to myself if given the chance, or more importantly to me is speaking to the person in person, like at a conference. There's certain guys that I don't necessarily know that personally, but if I talk to them in person at a conference, I'll take more heed of what they say. My network is something that I don't know if I should just say relied upon, but I've definitely used. There's definitely been connections throughout my portfolios over the 8 years that I've been doing this on my own. And sticking with groups of people that I know to a certain degree has really helped my success. In terms of like people I listen to, like there's mentors I've had from afar, especially early on, like guys like Rick Rule. I would listen to anything that he put out. And I think again, the strength of mine has been the ability to listen and sort of put ego aside and learn from guys that have gone before and obviously been successful. And I employed some of those adages that, especially Rick is very good at dispelling. And so I put that into action. And again, Rick is still one of those guys, and it depends on who he's talking to. I will still listen to every time. I've got other mentors, guys like Giant Bhandari have been a huge help on, I can remember being in Singapore in 2019 and walking through one of the markets, and we were talking about selling, and something clicked and how important selling is. And I think that's probably where most people just don't get it. And the 10 bagger becomes such a problem for people's minds. They get so trapped in the clouds that they forget to sell or to forget to take profits. And Giant really got that in my head. And I would say that was the biggest change I made over the following years, was that ability to sell, and being fixated on that like price to value ratio, and not being too greedy. So yeah, there's a number of people that I would say have, or I let have influence over me. But I try to do my own thing, and I think I have my own style. I've learned by losing money on sole expiration companies, and I looking back, and especially Luke, talking to you and seeing some of the stuff you've done with talking about discovery investing, and Willem has been a very good voice on it too. I think that's probably, if you're going to play sole expiration, seeing a couple of drill holes first is probably the best way to do it. The other side is I've done well on the prospect generation side of things, Origin Royalties, Kenorland Minerals, companies that I think stand out amongst that genre. And it's not that people weren't following that. There's a lot of people but I think a lot of people will talk about the more flashier stuff first. And I've sort of overloaded my portfolio to a higher degree in some of these maybe less flashier names, and still done very well on them. So,
Brian, I find newsletter, and stop me again if I'm getting too personal, or if I'm getting annoying as well. But I find a newsletter business very interesting, from a business perspective, but also from an industry perspective in our space. And my opinion on it has changed over the years multiple times, mostly because I find it hard to manage, especially in venture capital, where failure is the norm here, right? And it should be the expectation. The risks are very high, but venture capital really only works if you sell investors on blue skies, right? That's what these CEOs go out there and do. And of course, again, those blue skies, they're never going to come without murky waters or cloudy days and fogs of uncertainty, which I think I should have gone for a career as a poet. But my point or question here is, how do you manage that? Like, when you've lost money, you said you've made mistakes. How do you manage that? How do you go back to your subscribers who maybe joined you on a deal, or lost money with you, or had too high of an expectation? How do you deal with that after you've had a loss that was public on your newsletter?
Well, I rank all the companies in my portfolio. I rank them and then weight them in terms of the amount of money that I roughly have in each position. And that there's a price target that comes along with that. And hopefully, especially in the initial recommendation, that sort of outlines how they're going to get there and what that price target sort of means. And I've definitely lost money on using that. But there's not much I can do. I think that, if you think that you're going to hit a home run on everything you invest in the junior mining space, you're absolutely wrong. And, I think even the best stock pickers, maybe it's 50 or 60% of the companies they invest in, they're, really successful in. Then they probably have a couple that do nothing. And then you probably have two or three that are losers. And I think that's just the reality of the sector. And maybe at the top end, maybe it's not that at all. Maybe they do get 100% of their picks right. But I just think that's part and parcel of what it is to be a junior mining sector investor. So it does bother me when I lose money, and if that trickles down to other people that have read my stuff and bought. But that's just how it goes. And I think people have to learn from those things, learn from the mistakes I make, and try not to make them in the future. The other side to that is the successes shouldn't be clouded by where the mistakes are. And you got to learn from those successes, and again, try to propel those forward so that you get your average up in terms of right to wrong.
Right, but you still probably get like angry emails though, right? I see comments as well when I'm hosting other newsletter writers that maybe made a wrong call, and people kind of get frustrated, and sometimes rightfully so, right? Oftentimes they're abusive, and there's no reason for that, of course, but sometimes it's a valid objection. So how do you deal with that when someone sends you an email, says like, Brian, I lost money on this? Like, I mean, and I again, I'm getting a bit personal here, but I'm just thinking mentally that would be hard for me to deal with. So that's why I'm asking how you deal with it.
Yeah, no, like I said, I don't necessarily, I don't like it at all. But again, I just go back to myself. Like, well, if you think you're coming in here, you're gonna make money on every single investment you make, you're absolutely wrong. And that, like, out of all the other newsletter writers, they're he's giving bad picks too at some points. And it's varying degrees. So honestly, I try not to carry it. Like I can feel, especially empathize in the moment. And it's not something I can guarantee you I meant to do because I lost money too. But to me, it's the realization that I'm not going to make a great pick every single time. And that's just the way it is. And if people don't like me for it, then so be it. And I've always looked at this as my investments or my portfolio performance is going to be what makes me money. And if my popularity falls for whatever reason, given a bad pick, then so be it. There's not much I can do about that. That's the risk I take for what I'm doing. And I don't see any other way around it.
Do you believe in concentration, and what would that be? One stock, 5 stocks, or are you more like diversifying with what it means to you? 20 stocks, 30 stocks, 40 stocks? Like, what is your portfolio like typically?
Yep. So I would do probably a maximum of 20. And of course, if you want to just even like a 5% per position. But that right now, I think the portfolio has 15 companies in it. And I've got 9.5% cash. And so to me, that's, given the landscape of all the stuff going on, to me, that's fully allocated. But then the positions it's fully dispersed. So like I said, I rank the companies in the portfolio. And if you looked at the rankings now, about 24% is in 2 companies. And then it's sort of broad, where you have a range from all the way down to 1% to maybe 7. And of course, the 1%er is on, I do have a sole expiration company in the portfolio. And it's more interest sake that I did that. But the rest, prospect generators, given their certain situations and my outlook, would range between 2.5%, 5% probably. And then there's a couple of developers that have done well, and I've reallocated money from there. In terms of diversification, I'm not afraid to invest in the different metals. Right now, it's definitely a precious metals focused portfolio, but there's a nickel company, there's a lithium company. Yeah, I think that's all the basis. Oh, there's copper too. There's a couple of copper companies. So yeah, like I'm definitely not afraid to diversify. I think the opportunities in precious metals, and that's where I've sort of slanted the weighting. But I've invested in just about everything over the course of, especially the last 8 years that I've been doing this. And that's the way I'll move forward. I try to be contrarian. I can say that it's super hard to do. I think the precious metals market is where you probably have the best opportunity right now. But then you look at stuff like PGMs, probably the nickel market to a certain extent, maybe lithium on the third ranking there off the top of my head. I think are really interesting. Like, PGMs, a lot of these there's some decent projects out there that need the palladium or platinum price to double for them to be economic. When you get in those sort of situations, I think, it becomes quite interesting what's going to happen. It's sort of like where uranium was back, probably 3 years when it was selling for under $30. And the fact that most of the developers needed probably 70 or 80 for anything to make sense. So, but for me, like I've kind of hesitated. I've got those companies, I've got a list of them, and I've got some of them, some due diligence done on them. But I've sort of waited to see what we're going to see in the market ahead. Whether the Fed is indeed going to pivot, what might happen into the broader market, tech being the big one, if that unravels. So, yeah.
If you look at your like the 1, 2, or 3 biggest positions, not only right now, but also 2 years ago, 5 years ago, 8 years ago, are they often the ones that perform best compared to the smaller ones in your portfolio?
Not always, but I would say I have done pretty good as of late. Like Q2 was really good because I was weighted higher in those companies. Like I'll say like Montage. It took a little while for that to come together, but when it did, that position's up 200%. G Mining was another one that, again, sort of waver. I look back, I should have been more in G Mining, especially with how passionate or confident I was in that it was going to work, I was still allocated really well. Like I was a good 10 or 11% of my portfolio. But I guess it always hindsight is 2020, but I wish I was more allocated, obviously, in that looking back. But those are two winners that really made a big difference in Q2. And when you're weighted, in that 10% range, it makes a difference. It makes a difference.
If you look at like G mining, I think most people in this industry who follow stuff know that one has good followers, good team, big shareholders. But still, companies that are ramping up in production and only have one project, there's just one thing in the country or with the project that has to go wrong, and the complete company is toast.
Totally.
And I do think that G mining is certainly something. I also owned it and sold it too early, but still made money on it. I feel like that one probably has, the supporters are so big and so experienced and big deep pockets that it was worth the risk. But it's still one project, and everything depends on that one project in going in production.
Yeah. Oh, and then that's why it was only 10%. And that's why I don't kick myself, because that's the risk allocation that I took. And it is only hindsight that I was like, oh, I should have been more confident in their execution. But, Brazil could have fallen apart. And you could have had huge issues there, and it would have nothing to do with their execution, and still lost money, or maybe not made as much. Yeah. So you're absolutely right. And I think that's why you can never go back in hindsight, even on your losses, and say, well, I should have done this. You try to make the best decision you can when you take your position, or in the tranches that you take. And you live with that decision. And then you look back and say, what points did you get wrong? And hopefully it's not portfolio allocation. Like you're not too confident and you put 20, 30, 40% of your portfolio in one thing. Because then, especially depending on what kind of company it is and where we are in the cycle, you can get wiped out in one foul swoop. And it's an absolute shame if I think that's the reason why you're out of the resource sector.
How much of that do you think is gambling, Brian, or guessing? Let's call it guessing. But the last time on there was a comment on one of our interviews. Someone said something along the lines of, "It's amazing how much research you have to do and you can do, and in the end, it's all gambling." Do you agree with that? Do you think it's still a lot of gambling, and how much guessing do you think it's involved?
I think if you're on the expiration side, I think you're closer to the gambling, but it's educated. You're still talking about, and the people that play it big are extremely smart people. And I think you're taking educated guesses and hoping that you're right. I think with the developers and the producers, and this is why I prefer the developer side of thing. I like that baseline value proposition where my downside somewhat protected because there's something real and underlying there. Of course, you can still get it wrong and you can still lose 50% of your money. But I think when you do pick right, you're protecting your baseline investment. And especially if you can get it cheap enough, being contrarian and buying it cheap enough that your downside's protected. And therefore, I don't think it's necessarily gambling. And if I look back at the successes that I've had, I think there's more things to say that, oh yeah, you know what, that was a really good decision based off these things because they were absolutely true. And so to me, I think it can be on whatever spectrum you're on. And of course, anybody can call any sort of investment gambling to a degree. But I think for the most part, especially if you're on the development or producer side of things, I think there's underlying value there. And so that's not necessarily, gambling, but you are hoping that management executes. You're hoping that the metal price stays reasonable, and it's gravy if it takes off. So yeah, that's what I'd say. Like I think people that have lost money typically will say it's gambling and they'll be upset. And then if you talk to the people that have been successful, like, oh no, I'm smart and I made a good decision. So
what about when you start going up higher up in the market cap, do you think there's still a level playing field? And is there an edge for me to be had? I mean, I'm not in Vancouver. I don't have that deep of a network. I don't get any special information. As a retail investor, can I produce any meaningful returns given that maybe it's not that much of a level playing field, and especially when you include salaries and options and founders shares and everything that the insiders part of this world are involved in. Yeah. Do you think there's a level playing field?
Well, I think first you need to define what's meaningful. And once what's meaningful to you in terms of return probably reflects where you're going to be in the market. Obviously, the producers don't have as much upside as a $5 million market cap exploration company, but it also doesn't have the risk. I think on the production side of thing, if you can read a balance sheet and you can have and take somewhat of a view on the company's underlying assets, and what Luke said earlier about like single producing assets, you probably want to be really careful. But if the company's got multiple assets that are producing, you can sort of see how much life is left and you can get an idea where they are financially. And of course, if the metal price is with you in that part of the cycle, I think you can still make really good returns. But I think it's a constant juggling game when it comes to the junior mining side of things. So the developers and the explorers. And I do think that somebody that's not fully plugged in, yes, they are at a disadvantage. But I think you can absolutely still make money. And the reason why I say that is because I did. But in retrospect, looking at what I do now, going to the conferences, the network of people that I know, it's a huge advantage in terms of information flow, in terms of gauging what people are looking at in the market, what they're valuing, what they're not interested in. And so I would say, if you're plugged in, it's an advantage. And in terms of your return, it's a sliding scale, but you're going to take on way more risk if you're going to be on the exploration side of things. So you have to determine to yourself what is meaningful return and what is meaningful risk. And when you sort that out, that sort of directs you into what part of the market you should be in. And then you have to make sure you have somewhat of the skill set to apply it or follow somebody who does that you trust.
That's interesting when you say someone who you trust, because we can talk about your program field notes right after this. It's going to flow nicely into it. But management, right? Everyone always says, "Oh, management's everything." You have to trust management, and you have to have a good management team. But what is a good management team? That's a question I've asked almost out of almost everybody who's come on the channel. But I find it more an art than a science. Like there's not a fixed set of rules with people, or like there's not the same answer that keeps coming back too often. What is that for you? How do you find someone who's good? What are you looking for in a management team?
That's an excellent question. And I don't necessarily have a straight definitive answer for you, but I'll give you a few points. I think, like I said, there's a few groups of people that I've had success with, and it hasn't necessarily been with the same person, but it's been association with the same people. And that to me has been meaningful. I think that you have to realize the junior mining sector is one of dilution, where these companies are constantly going to the market and asking for more money, and a good portion of that goes into G&A. And so there's very few of these companies that are going to be long-term holds. When you have that sort of perspective that G&A is going to destroy a lot of your value over time, if the company especially doesn't hit on a drill hole, isn't able to align, if their development company align their story with where you are in the cycle, even if the management team's good, you're probably still going to lose money. So I think that's a fact that sort of is the overarching that you have to sort of realize. The other thing with a good management team, I think guys that have a good position in their own company, that it matters how much they dilute. But there's also, and I won't go into, there are some examples I could tell you, but I don't want to cast mud today. But where the guy put in a bunch of money, and at first I thought, oh, that's excellent, he's got skin in the game and blah, blah, blah. But then his salary is almost tripled over the last 3 to 5 years. And I thought, well, he just made all his money back in salary and he still holds the share position. So it didn't really matter to him how much dilution. And in fact, one of the companies that comes to mind right now, they just financed a huge bought deal at the lowest price the share price has basically been at since the 2020 crash. And I'd sold the company a few months back, but I did lose money overall. And I think to myself, wow, like this is brutal. But on the technical side, I think they're also one of the most savvy groups out there, and their history shows that from a technical perspective that they are extremely competent. But it goes to show you. So I almost think that it's a moving target, maybe, that, you can have those things where it's technical competence, it's skin in the game, where it's, I guess, personability and ability to sell to the market. You sort of gauge them on all those things, and then maybe your underlying feeling of whether you trust them or not. But then over time, any of these things can seemingly change, and sometimes the management teams don't even necessarily see it from your point of view, and they're sort of blind to it. So it might be a moving target. And I think, again, you do your best on those kind of 4 points, and you watch over time, and just realize that for most of these companies, when you start holding it for over probably 2 or 3 years, man, you've probably lost a lot of value already just in how much they've diluted.
So even with the best management teams, let's just assume that you find a company like G Mining with very early, with big investors, big management team, the real names, and you own a good position. Should you always be a trader in this business? Should you always sell? Because you talked about selling earlier. And I think let me just give one example. In the Great Bear story, I think people who owned it from day one and kept it until the end, it's almost like stupid, even though those people did amazingly well. But how often can you do can you play it like that? It's almost impossible. So what do you think about trading versus holding, and how long should you own a well-performing stock?
Yeah, that is such a good question. I've often wondered myself but I know also know for myself, like, especially the last, let's say, 5 years, I do know how to sell. I do know how to take profits. And so the idea of holding a stock up to a 10 bagger even is mind blowing to me. And I think is very poor performance by the investor. I think it's got to be based out of ignorance, or your money's locked up and you can't trade it. Some of those guys, the guys that go out there and hold 10% of a company. Okay, well, and especially if they're a director or part of the management team, they're sort of held into that position. And it's a much different look in terms of outlook into why you invested and sort of how that's going to play out. But for the general guy that's, probably buying a few $1,000s up to maybe 50, 60, $100,000 worth of shares, I don't know how you don't start taking some of that money out, and maybe the 10 baggers on the last $10,000 worth of shares. But then again, it comes with your comfort. Like I could see somebody pull their principal out, like the whole thing, sell half on a double and let that ride. But even still, I think if you do that for too long, you still end up on the downside of things because of how cyclical the market is. And there's very few cases where you get bought out or you have that end game necessarily within the cycle that you've made the money, and you get your money taken by or paid for by the purchasing company. So it's extremely hard. Like the best return I had was on Abra Silver, and that goes back to Abra Plata. And I bought that at 3 cents. I participated in the financing at 8 cents and 12 cents, I think, and I had warrants on those too. At its high, it was a 20 bagger. And like I said, I had sold all the way at long. So I don't know. I have no idea how much money ended up being in that 20 bag area, but I can tell you it was nowhere near the full amount. So that's my perspective on that. Some people have, the ability, the courage to hold, and I hope it works out for them, but it doesn't seem like a good idea to me.
You also have to be, like, you almost have to be an optimist to make it in this business. There has to be some sort of a vision, I think, that you have for a certain land package or something like that to be able to get those 20x returns. And so I get your point there. But what about on the other side, like when cutting losses? What's the biggest loss you ever took, and how did you know when to exit?
Well, that's a very good question. I would say the biggest loss I took or probably will take, is 100%. I invested in a private company about 4 years ago. I think it was 2020. And the company has been terrible they won't release financials. There's been some rumors. And this is basically the deal. They bought this past producing gold mine in Brazil, and supposedly there was a tailings dam leak or something, some failure occurred. wasn't necessarily reported, or I haven't seen news of it, but I just heard rumor of it. Asked the management, no answer, no answer, no answer. They're ducking me at the conferences, and talking to another friend who's invested in the company, and he's like, basically just consider it gone. So that's 100%, and that's definitely been one of my is a great lesson for me. It's in terms of the private companies. You have to be really sure, and I think you want to be more sure, especially if timeline matters to you, that you're picking a company, let's say right now, that's maybe a precious metal focused private company that probably realistically is going to go public when they say they are, because the precious metal market probably will be there. Some of these other companies that I know, let's say in lithium, these guys said that they were going to be IPOing last fall, and we're at the next fall, and it doesn't look like I'm not invested in the company, but I know the management team. So it just goes to show even the best laid plans can fall apart depending on where the market is. And I don't necessarily blame some of the private companies for not wanting to go public into a market that's abysmal, especially for something like lithium right now. So yeah, 100%. But I would say like generally in a public realm, probably 50 or 60% is probably where I've lost or has been the highest. And that was a value trap sort of idea. And that actually was the company I was complaining about with the management team. And so that's relatively recent. That was Q1 when I sold it. But it was one of those companies that just never got their value recognized, or the value as I had seen it. And I think looking back on it, I think I could do a little bit better in terms of maybe and I wouldn't say the entry price, but maybe the quality of the deposit. Maybe it was too close to marginal, even though I think its location and its economics were decent enough. I thought it would have garnered more attention. But it's a little more complex than that in terms of the management team. So yeah, 50 or 60% is probably the highest. I don't put stop loss on. But then again, I would sell a company at a 20 or 30% loss if I would came to the conclusion that, and I've done this, if I thought the company, how I thought it was going to play out, wasn't working or wasn't going to be there. And so I'd cut my losses as soon as I could and put it into something else.
You started a show that looks a little bit like a Netflix original. Very well made. I've watched all the episodes so far. Tell us about Field Notes and where are you going with it?
Yeah. So Field Notes, I always had the idea ever since I started doing this on my own and started writing. I thought it would be great to have this video series focused on site visits, especially and that's what makes the newest episode a little bit that much sweeter, is because Newfoundland was the first place I ever did my own self-paid for site visit, and I went and visited 3 or 4 companies over the stretch of 4 or 5 days. And it was so impactful, the difference between sitting behind my desk and then actually getting to site, driving across the province, seeing the lay of the land and that sort of thing. And in this case, meeting some of the management in person. And so that kind of the idea had been percolating. And even though it was sort of it was definitely a bear market last year in terms of most of the resource sector, I decided to move forward with it. And so episode 1, it was basically the background of me, sort of the story we started this interview off with, but then I kind of outlaid what the rest of the series is going to be about. And so the premise is to take you to site with the companies that I'm personally invested in and I think are good companies to look at, and show you, their projects and letting you meet the management team, hopefully shedding some more personable light onto the people that they are, and bringing it to you in the highest quality that I can. So I use a professional film crew out of Toronto. Tristan and Aaron are fantastic at what they do, and really bring the ideas that we're trying to capture to life. In this latest episode in Newfoundland, we called it the Life of the Modern Prospector, and it featured Altius Minerals. And just so happened to coincided, I took the Newfoundland prospecting course from last fall to this spring, and part of it was doing a practicum in the field to get your certification. And it also coincides with my affinity towards prospect generation as a way to play exploration, but to have an actual business model that sort of fits in with it. And I thought that Altius Minerals was probably the best example, especially because I've known them for so long. But going from a single digit market cap to $1 billion market cap and doing that with less risk than there is out there if you pick right. So, the episode 3 follows me to Newfoundland. We go check out one of their projects they use for project generation. They'll get a royalty when they JV it out to a junior or a senior mining company. They'll have a royalty on it, probably some equity, probably some cash. And this has been the way that they've generated their business organically, or at least a portion of their business organically over the last decade, or 24 years, actually, in Altus's case. And so that was the idea of episode 3, and that's what we were trying to capture.
Are you getting compensated for those, or is that all out of pocket for you?
Sure. So episode 1, I paid for. Episode 2 was with FPX Nickel. FPX covered basically all the costs associated with, and most of the companies moving forward that I'll feature, that's what I'll try to do, is get them to cover the costs. Episode 3 with Altius Minerals, I produced myself. So 2 of the 3 episodes I produced myself with no compensation whatsoever.
I'm asking that because I was wondering how you manage that with having the newsletter at the same time, because objectivity is of course a very important part for you here. How do you, and also you go on mining stock education a lot. I think you help Bill in the production of it or something along those lines, and that is a sponsored paid for show, if I understand correctly. Oftentimes, not all the times. But so, yeah, how do you manage objectivity with taking money from the company? Which by the way, I'm not being critical of that, because that's how this channel operates as well. So,
no, it's all good. Yeah, so I'm sure some people might take exception to them covering costs, but there's a couple of components to it. So first, like FPX Nickel, I've been an investor in FPX since 2016, 2017. I made close to it as like 900%. I think it was the top end return on FPX Nickel, and that's obviously come back. I think if someone wanted to say I did the video because of some financial gain or something like that, I think you're absolutely wrong. The biggest part of it is I buy companies based on my criteria, and whether they want to do a field notes or not has no bearing on whether I buy them. And I guess you have to take my word for that being true. I think if you ask most people in the sector, I've got a very good reputation on being independent, and I plan to keep it that way. And while I'll look to get the field notes episodes paid for in terms of the expenses, especially for the film crew, that's all it'll be, and it's never an expectation. And if you look, we started this last August, and I produced 2 of the 3 episodes myself, and I plan to produce more myself just out of interest, and I enjoy it. And so that's the way it's going to be forward, and it has no bearing on whether I buy a company or not. In terms of MSE, Bill is a very good friend of mine, and invariably we've been talking about guys like Rick Rule. And so how it started, he said, "Hey, do you want to be on the interview with me?" And I interviewed, like, if you go back to 2016, 2017, I did a couple phone interviews with him where I recorded it. And then I myself typed it out, what he said and what my questions were, and then posted it on like a number of different sites. And that's how I did it. But I'd always wanted to do like a Zoom interview or an in-person interview with Rick. And so Bill asked me, and so it was a big deal for me, and it was a lot of fun. And then from there, it just spurred. He said to me, "Do you want to do some interviews yourself?" And if you look, I only interview analysts or other investors in the sector. I don't do any company interviews. And so to me, I'm not associated with any of the sponsorship that Bill may or may not have. And he does those interviews, and he has his own business. So for me, MSE is a way for me to talk to people I'm interested in, and who Bill wants me to interview. But it's mostly I do it out of my own interest. And it's been fantastic, being on the other side of the microphone and being able to talk to people that I respect their opinion, and in many cases learning some new people that I had no idea about. So I think it's a great way to supplement what I do.
Fair enough, and it is an interesting world because there is. I always say that in my disclaimer as well, is that there is a conflict of interest, and oftentimes these companies do see what they do with us as a way to do a little bit of promotion, right? They do marketing. That's how they see these things. And people should still look at these things with a little bit of a skeptical view and know that generally we are biased. And but I think you do a good job of covering that. I think you do a good job of being objective. And again, it comes down to trust as well. If someone's having doubts, it's better off, you're better off not, not consuming the content if you're not feeling it, basically. So yeah. Brian, this has been great. I think I'm mostly out of questions here. I would like to repeat this though, so because there's a lot to talk about. Next time, maybe we can talk about just your outlook on metals or whatnot. But this is a very good introduction, I think. Luke, what do you think? Any other questions you wanted to ask?
No, amazing. I enjoy talking about investing and to investors and look what they do, because I think most people, most people have a stream of income, and I think Brian as well, and you as well, and I wish I could say the same, but it's I think it's not many people who really make money in this business. Most people lose money and they dream big. So I think it's really good to see that you're actually doing well. You make returns, and you're not shy of saying that you also have, of course, losers, because everyone does. And listening to these things, I really think that it's helpful to people to think about the risks and knowing that you're going to lose money, especially as somebody starting up. If you're new to the business, you're going to lose money, and you have to realize that. And not blowing up your account is what you like you said. So I think I really enjoyed the interview, and I have no further questions. Well, I have further questions, but that would really make our interview way longer. So I thank you for joining.
Oh no, pleasure is all mine. I would just say this is that it's something that I've had to learn myself and adapt. I think far too many people try to adapt themselves to other people's ideas and views of the market, where you should really start with yourself first and understand, to whatever degree that is, yourself, where the risk tolerance, what you actually know and what you don't know. And sort of that should direct you where to start. And then you're invariably, that's going to direct you to the people that you should listen to. And then whether you trust them or not is a whole other story. But I think far too many people do not spend any time on themselves. And they're just like, oh, I liked what he said, I'm going to put money into that, or this idea or that idea, flip flop. And there's no concrete base. And I think anybody would be a lot more successful if they started with themselves.
That was me 2 years ago, or maybe 3 years ago by now. But that's what I did. I just literally bought whatever someone told me was hot. Approached it completely wrongly, and yeah, I think I lost about half of my money, which apparently is good performance for the sector. If at least if I measure it against the TSXV, I'd still outperform it because it's down 75%. So hey. Good, Brian. No, we should do this again. Thank you so much for doing this. What do you think? I asked Luke if we're forgetting to ask you any questions. Do you think we forgot to ask you any questions? Anything you wanted to talk about here?
No, great conversation. Thank you so much for having me on.
Yeah, pleasure is all mine, Brian. I hope we can do it again soon, actually. This was an enjoyable conversation, but there's so much more to talk about with you specifically. But I do already have Alain in the room. So, gentlemen, Luke, I know you also have to go. So feel free to drop off together with Brian. Again, thank you both for doing this. So speak to you, Luke, next week, as well as again together with John Goodman. But Alain is here now. And just a quick reminder for people still listening. I did a disclaimer at the beginning of this video, of course, but PRISMO Metals, the company that Alain is the CEO of, is a paying client of Resource Talks. So treat everything that you see on here as biased and as marketing. Go back to the beginning and listen to the warning, though. If you didn't, I have no idea why I didn't. I literally wrote that it's an important warning. It is actually important. But Alain, this is the you've been on the channel multiple times. People know you, but do they really know the real Alain behind what we see on screen? And so this is also the second time that I'm doing this new segment of Junior Mining Talks. I'm calling it Excavating Executives. I think not a huge fan of the name. I don't know if it's going to catch up. People listening, let me know what I should call it. But Alain, you're still kind of my test subject, if you will. And I'm going to need you to take me all the way back to little Alain. When was he born? Where was he born? What was your childhood like? Take me all the way back.
All right. Well, it's great to be back on your show, Antonio. I see that you continue to be innovative with this new topic. I'm so happy to to be the second one to do this type of episode with you. I might have some names for you to invite, and but we can talk about that later. So yeah, let's go back. Let's go back in time, 1963 in Montreal, Quebec. I was born there, and I was raised in Montreal. I lived in Montreal since until 2015, when my wife and I decided to move to Tucson, Arizona. Stayed there for 4 years, moved back to Canada, and we now live in Vancouver since 2019. And traditional French Canadian upbringing. I actually learned English when I was in my 20s. Although we had to take English at school, which I did, and I actually loved it. I didn't really speak the language, and then I remember when I made a big effort to start learning English was after I graduated from law school, and I picked a law firm in Montreal that was mainly English speaking. There were 16 partners, only 2 were French Canadians, and I said, well, that's probably the place for me to go. It'll force me to learn English, and I did it, and that worked out. And then I fell in love with a woman from Calgary who spoke English, and had been with her since 31 years this year. And so we speak English at home, her and I.
Mais très bon. Nous pouvons aussi parler français si vous voulez. I also started
C'est comme
learning
tu veux,
English.
Antonio.
Un
Il y a
petit
une
peu,
belle
ouais.
communauté d'investisseurs au Québec.
I only started learning English when I was in my 20s too, in college actually. French is not any of my primary languages. I can say a few things. I know enough to work in a restaurant basically in Brussels. So that's where that's coming from. But what kind of kid were you back in the day? Like were you sort of the popular loud kid? Were you sort of bogged down into maths, or like who was Alain as a kid?
Yeah. No, I wouldn't say I was the popular kid in school. I would say I was the guy who was always driven to do well academically. And like any French Canadian at the time, we'd go to school that had a very important religious aspects to them. There were, obviously Christian upbringing at school, and the traditional, math, French, and so on and so forth, history, chemistry. And so I always strive to do well at in school. Played hockey like all young French Canadians at the time. Played hockey until I got to bar school, and I chose the law practice when I graduated from what we call CEGEP, which is really 2 more years that you do after high school and before university. And I went to the Jesuits private school for that, and all my friends were picking up profession. A lot of guys that I know went into engineering, medicine, and other professions like that. And I chose law, and that's what I did.
Big shot lawyer to mining executive. That's kind of an interesting story that I do want to go to here in a second. But that was obviously not your first job. What was your first job? Did you work as a kid selling ice cream or newspapers or whatever, something along those lines?
I did a little bit of everything. I remember there was my first experience with unions. So I worked in landscaping one summer as a kid, but I also liked to play golf. And so we were landscaping, and then I realized in the morning we had to take a 30-minute break, and then we had to take an hour for lunch, and then we had to take another 30-minute break in the afternoon. And, and we'd start at whatever, 8:30. So I had this genius idea to go to my boss one day. He said, well, I like to play golf, so why don't I come here at 7, and I won't take a break in the morning. I won't take a break in the afternoon, and I'll take 30 minutes to eat my lunch, and I can leave early and play golf. And he said, no, it doesn't work that way. It's a unionized job. You got to take your breaks. So instead of being at the golf course, at 1:30 or 2 o'clock, when all my buddies were there, I'd have to go at 4 o'clock, anyways. But no, did a little bit of everything to earn a little bit of money, and but I would always try in these little jobs to try to excel. Going through law school, actually, with a buddy of mine, we had a food distribution business. So we would import fine foods from France and sell it to all the best restaurants in Montreal and the best épicerie. And so that helped me finance my law studies. So I'd sometimes I'd have 3 courses in the morning, and at lunchtime, instead of staying at school with my buddies, I'd go make some deliveries and then come back for the afternoon classes.
Was that the only business you ever owned? I see a trend within the CEOs I talk to that they do tend to gravitate towards being business owners. That was your first business? Was it the only one that you ever owned?
Well, that was yeah. I mean, that was a business that we had. My friend and I. So that was during the time I was in law school, whatever that was, 3 years, and it was in a way, it was a part-time thing. And then from that on, I went to law school, worked in a law firm for 2 years, and then you can say that I mean, I've been an entrepreneur, kind of doing my own thing. After that, I did own a very successful investor relations firm. What happened, and Antonio, is I left the law practice in '87, and with 3 friends from law school, we said, let's become consultants to small and medium-sized companies that want to go public, access capital markets, financings. And so we came at it from a very legal perspective, because that's what we were. We're lawyers. And I remember I took my first company public. We did an IPO. It was a educational software company from Montreal. Took it public on the Vancouver Stock Exchange. I think it was in '88. And it was my first chance. Merit Investment, the late Paul Chalmers, gave me my first break. And he said, okay, well, I'm going to do your IPO, but now you need to hire a promoter. And I said, Paul, what's a promoter? He said, well, my clients will have all the stock and they'll want to sell to somebody else. So the promoter will bring new buyers in. I said, okay, well, that sounds like a reasonable request. So I hired my first promoter, and that didn't work out, and hired a second one, and that didn't work out neither. And those were Vancouver promoters. They've been around a while in this town. And then, being entrepreneur, I said, well, why don't I do the services that the promoter is supposed to do, which is investor relations. So I built a firm. It was called Trilogy Integrated Investor Relations. We had an office in Montreal, an office in Toronto. I had 2 partners, and I ran that until 2000. And that's when I realized that I sort of had diverted a lot from my original plan of approaching the capital markets from a legal/corporate standpoint. We had 26 employees. We were doing stuff for small companies. We did the annual report for the CIBC, Barrick, TELUS, and so on and so forth. We did all the investor relations with TELUS about ClearNet for 4.6 billion. So we were active with probably the bigger guys in town at the time. And so I sold my participation back to my partners in 2000. The other thing that was happening at the time also, Antonio, as of the 2000, is that you could tell that there was such a thing as investor relations firms that were being set up across the country. And investor relations was more and more recognized as a profession, and there was an association and so on and so forth. And that's when so you could say that really was the ownership of a thriving business. We grew it from nothing to, as I said, 26 employees, and now I've kind of backed off a little bit, wanting to, if you will, own my own business. and I'm much closer to my roots, which is to just provide my experience and my skills to just a few number of companies.
But does the sector not matter too, though? Because what I've noticed oftentimes with executives in the mining space is that they have a specific passion for mining or geology or exploration, which I don't know if you have that as a lawyer. So, well, do you have that passion? And do you have to have that passion to be a good executive?
No, you don't have. Let me explain that, right? So as an executive, you need to know what you're good at, and you need to stay in your lane. Too often I see guys who sort of do what I do, but they think that they can suddenly become an expert on the edges of geology. And I don't believe in that. My approach is different. I want to surround myself with the best people that I can find that are geologists. So in the one company that you know well, that I'm the CEO of, I got Dr. Craig Gibson, I got Steve Robertson, I got Peter McGaw on some of our projects. We have access to Dr. Jesus Villador for our Mexico project. Linus Keating is also a doctor. So the little that I know about geology, I get from these guys. Now, do I like geology? Yes. I always loved chemistry. So when the guys talk about the limestone units at Hodbrecha and how that became skarn, mineralized skarn with copper content, I'm fascinated by these things. And I've actually asked Steve Robertson, our president, if he could help me find a way to take geology classes here in Vancouver at one of the colleges. I don't have. I would have, in order to do it the regular way, I'd have to get my transcripts for math and chemistry dating back to 1981, and it's just not something that I want to do. But I do want to learn about the geology. I do want to learn about the chemistry of geology, and but I'm very careful staying in my lane. And now that being said, I'm involved in all of the discussions, and there's a certain understanding that I have on what the geological plans, how that translate into a capital market story, and I like to put these have a say in that how that story gets put together.
So when you probably, what would you do if you weren't in mining then in that case? You probably wouldn't have gravitated towards this space specifically, but where do you see yourself if you weren't in mining today?
Okay, so I know the answer. I'm just thinking about how I'm going to put two things together here.
Sure.
So how did I get into mining? I got into mining, primarily because I met two guys that I like and I respect a lot, and that's Craig Gibson and Peter McGaw. And that's as a result of living in Tucson. So I'm in mining because I generally kind of like the concept of and potential, finding something out of nothing and create a lot of wealth. It's a big driver. Attracted by the people. If I wasn't into mining, I mean, I did get involved in non-mining capital market stuff, and it was a defense and security company I worked with before COVID and during COVID, and raised a whole bunch of money for the company. But I tell you what, so here's an important point for me in the junior space, mining, non-mining. So and the big difference. So in non-mining, if you have a pre-revenue company or a small growing company, or any kind of just think about AI. Everybody's going into AI, right? And a lot of the success, if not the entire success of these non-mining companies, is dependent on how well management can do, right? So if they don't do well, then management will get criticized, and management should get criticized for non-delivery. And it's extremely rare to find good managers who actually create, small companies that get listed into big ones. I've been fortunate enough to be involved in several of them. And mining is a little bit the same, but a lot of it depends on Mother Nature. And so I would say the chances of success are pretty much the same on one or the other, but I like the aspect of depersonalizing somewhat the success of the company, and being able to blame Mother Nature if what we're looking for is not there. Now, if I to fully answer your question, so if I wasn't doing that, what I'm doing now in mining or non-mining, I'd probably go back to one of the things I was doing when I was in Tucson, Arizona. Took a bit of a sabbatical, and that was involved in professional amateur cycling. I've been very involved myself in cycling. That's so now I've competed as an amateur, raced a lot, and for 5 years I was chairman of a professional cycling team headquartered in Atlanta, and I also worked with a friend of mine out of Switzerland and did some acquisitions in the amateur cycling business in the U.S. And I think in 2017 we ran 27 days of amateur cycling in the U.S. and we had the largest series there. So I might go back to that, but I'm loving what I'm doing now too much, so I'll have to delay that return into cycling by a few years.
I thought you were in boxing by the looks of your picture with Mike Tyson.
No,
How'd
no,
that
that
ever
one
happen?
was
That's a story. That's got to be a story. Tell me the story for Mike Tyson.
yeah. So that was taken in Las Vegas at UFC 300,
Hmm.
and so I have a good friend. There's a good friend of mine who's good friends with Dana White, and so he goes to UFC all the time, and so I told him one day, I said, "Hey, Brandon, love to go to UFC, my first UFC fight." So we went, and yeah, so we were there, and Mark Zuckerberg was there, and Dana was there, and a whole bunch of other people, and there was me, and so it was my first UFC. And Mike Tyson was there. He was preparing for his big fight, which got delayed now because of his health reasons. But yeah, so got to take my picture with Mike. I've always somewhat been a fan of his. When I was younger, that's when he was in his heydays, and he was a great fighter.
So you walk up to him and you're just like, I just want to take a picture. And he goes like, yeah, go ahead.
Yeah. Well, I mean, the answer is yes. And the one thing that people need to keep in mind is celebrities are used to having their picture taken, right?
Hmm.
So it's not like, and then we were VIP guests at that UFC fight, so it's not like there was thousands of people around. There was maybe 50 of us. So if you're in that special section, then everybody knows that you're all there for the same reason, is because Dana White invited you.
Well, good for you that you get to do these things. That's awesome. How's I'm not hearing much about family life. Stop me if I'm getting too personal on that, but I like to get personal. How's family life? You brushed up on it there, but kids and so on.
Yeah, so 31 years, the same wife, 6 kids, 5 grandchildren, and one of our daughters was here 2 weeks ago and announced that she's 3 months pregnant, so number 6 on the way, and yeah, family man.
Good for you. How many grandkids?
5,
Five. What did they
and
start making
and the
them when they
one
were?
coming soon.
So they
So we
start
have
making.
three granddaughters in Calgary,
Hmm.
2 grandsons that used to live in Ottawa, Montreal, then Ottawa, and then they moved to Vancouver 2 weeks ago.
Hmm.
So grandma's super happy, and my oldest grandson super happy too. He was looking forward to moving to Vancouver so his granddad could cook him steaks. He thinks somehow my the way I cook my steaks is he likes. So
How do you cook your
yeah,
steaks?
reverse sear. So I've kind of given up on the barbecue. It's kind of living downtown, in a condo. We do have a barbecue outside, but yeah, I'll put it in the oven
Hmm.
and sear it. So that's my way of doing it.
Well, but having a family, or at least where I'm going with this, is thinking that, entrepreneurship, you're a lawyer involved with cycling and all these things at the same time, now a public company, which is time demanding. You probably have to make sacrifices along the way, maybe not only on the family side of things, but as a whole, right? Um, and I suppose we all have to do. But what was your biggest sacrifice that you had to make for your career?
Basically, my wife that makes most of the sacrifices. She so yeah, because yeah, so I mean, I could go on the success of a good marriage, but and a career, but the reality for me is that I like to work, and I have a wife she knows that, and she doesn't fight it, and she respects it, and she supports it. So I'll give you an example, right? So when the kids were growing up, we would spend our March break in Whistler. And everybody was skiing. So we would go skiing. I'd come back. We'd take the kids to the pool in indoor pool. I'd probably go on the bike when the kid Mary Lou was in the pool with the kids, and then I'd get home, and before dinner, you know, set myself apart from the rest of the family and work a little bit. And she knew that that's what was best for the family, which is, if dad doesn't spend some time keeping up with the work, he'll be stressed out, and nobody's going to benefit from that. So as I think, I know the saying in French, I don't know what it is, but be behind every great man is a great woman. But
Hmm.
I'm not saying I'm a great man, but she is a great woman. And I see a lot of the younger generation, um, and I have friends who have young kids, and they're not as fortunate as I was. And nowadays it's kind of, well, you change the diapers in the morning, and I'll change the diapers at night. My wife insists that for me to stop saying I change diapers. She thinks I never change diapers. But that's how we split responsibilities, right? So I provided for the family. I provide for the family. Um, and yeah, she's kind of a old style mother, grandmother, and wife.
I mean, you still keep working now, but it sounds to me like you've done well over your career, and like it almost sounds to me like you don't have to work right now. So why even keep working at this stage? Like what I'm saying here is I don't imagine it's the money that drives you here, and you still have to make those sacrifices, or at least, well, partly. So
It
yeah,
does.
why keep? Yeah.
Yeah. So the the main one is mental acuity. So look at Warren Buffett and Charlie Munger, right? They never retired. They'll never retire. And and why should they? They're some of the wealthiest guys around. Why does Warren Buffett work? Because he likes it, not because he has to. I like what I'm doing, and the whole concept of retirement is kind of weird for me. I like, what would I fill my time with? And I see people, they travel and on and on, and there are couples where they both retire and then they spend more time together, and that's all fine. But we live busy lives, and I work, and we got lots of kids to take care of and grandkids. So I'll never retire. What would I do, right? How can I find something else to replace doing what I really like doing? There's always something new, right? So you do a financing, uh, conditions are difficult. The markets is a bear market, and I like getting up in the morning and having a challenge. It's like I lived through '87 and the Asian currency crisis, 2008, and on and on. And there's always a rebound in the market. There's always an opportunity in the market, and there's always something new to learn. And that's what keeps me going.
Hmm. Do you ever feel out of your depth as you're doing that as again a non-geo or like a newcomer into the mining industry? You maybe don't feel out of your depth when it comes down to financings and all these things, but sometimes you probably do. I guess again, I suppose we all do. So when do you feel out of your depth?
Yeah. Well, so there's one good instance of that. So it was, I think, in March. So my wife and I still have a house in Tucson. We spent some time there in the winter. So I was in Tucson. Peter McGaw lives in Tucson. Craig Gibson is from Tucson, but he lives in Hermosillo. But he was at the Hot Breccia project, and so was Steve Robertson. And so one night, the four of us decide to go for dinner. And so the three geos start talking, including the two doctors in geology. And I literally, Antonio, had no clue what they were talking about. It's not an exaggeration. I had no idea what they were talking about because, one out of every three word was a new word for me. And you know what? And that's okay. I'm not the kind who's going to try to remember some of these names and regurgitate them to pretend that I'm smart and I know what I'm talking about when I don't. So I pick up enough. It's like you sit there and you see, well, what's a porphyry? What's a skarn? And it's like, okay, well, can you guys explain me that distinction? Because that's what people talk about. But is the abrigo formation a carbonate or not? Is not something that I really need to know. But I do know the answer now. So
has that ever made you want to go away from mining where you're like, I don't get it. Maybe I should be out, or this is too much, or the stress of financing is too much. Like, has something come across your day or your week where you thought, nope, I'm out?
No, as I said earlier, quite the contrary. I'd like to take some courses and college courses and learn more about it. I mean, listen, like I'm in Vancouver. I'm looking out the window here, and everything I'm seeing pretty much comes from the earth, right? So metal, cement, and it comes from the earth. It's part of our lives. It's the biggest part of our lives, and I find it fascinating that you can find something in a hole somewhere, and 0.5% of the rock content is copper, and then we're going to take that, extract it from the earth, turn it into copper, and then it will run the electricity everywhere on Earth. It's fascinating to me as a concept. So I do want to learn more, but I want to learn it the right way. I don't want to know buzzwords and buzz sentences and so on and so forth. It's of no interest to me. And so yeah, no, quite the contrary. Any adversity in my way is a great source of motivation.
I have it on my list here to ask you what your biggest regret is as well, but it almost sounds to me like your biggest regret might be not getting into mining sooner. Is that it?
My biggest regret is not marrying my wife sooner.
When did you guys
It's a
marry
true
again? What did you say,
story.
31?
It's a true story. I mean, I waited 3 years. I don't know why I waited 3 years.
That was not the case for me. I met my wife in May and we were living together by the end of August in the same year. So
I love it. Love it. Great.
we've only been together 10 years. You guys have been together over 30 years. So we'll see
Yep.
if we get there. So we'll see who was right in the end.
You'll get there. Just commit to it. And learn about male female differences. So if you do that, you're in good shape. But let's say regrets on on the business fronts, you know what? Do I have any regrets on the business fronts? I probably don't. There's there's one maybe that one can have regrets of selling too soon and not selling soon enough, kind of thing. To bring it to the micro as opposed to the macro. I don't think I have macro regrets. I like to tell this story. We had put a CPC together, capital pool company, and these micro nano SPACs, kind of a blind shell, and then the founders get stock at a discount. I think I had 1 million shares at 7.5 cents, and then we did this deal and took a company in the telecom business public called Astra Telecom, and by the time the stock hit 75 cents, I had sold my 1 million shares, and I was on top of the world. I was the smartest guy around, and literally within 4 years, the stock went to $41. So in a way, you could say I regret selling too soon, but that would be silly because I'm, almost made 10 times my money. So should I have a regret or
That's
or
not
not?
fair. That's not fair. Like a real regret. Nobody has regrets for making 10 times their money. We all have regrets. What's a real regret?
Well, well then if you put it that way, no, I don't have regrets. Um, I don't have regrets at a
What
macro level in business.
what would you do differently then if you could go back to a certain time in the past? Where do you go back to and what do you do differently?
Okay, so in other words, what are some of the lessons learned? Right?
Sure.
I could rephrase so the lessons learned. And I would say I wish I would have known earlier the importance of the quality I surround myself with. Right? So if you're a guy like me and you start in this business and you're fairly young, and in bull market times, money comes easily. So I had a lot of good times, and with some guys who made some good money, but um, it's to be able to have a sustainable business and have a successful career in business, you need to surround yourself with the best people possible.
Hmm.
So I guess put it as a regret. I wish I would have found that out, earlier than I did. I certainly found out when it wasn't too late by any stretch. But um, that's the one thing I would tell your viewers at a very early age when you start in this crazy business, or if you invest in mining companies, or if you want to become a mining executive, surround yourself the best people that you can find. And if you look at smart, successful guys like Warren Buffett and Charlie Munger, that's what they preach. Why? Because if you surround yourself with people who are talented, you're going to learn. You're going to learn from them. You're going to become better, both in business and other aspects of your life. So that'd be my answer.
Hmm. What do you do? What about you said mistakes and you said lessons learned, not mistakes. Um, and that's a good, I suppose, a positive way of looking at life, which is good. But how do you deal that when again we all have failures or mistakes or lessons learned? How do you cope with that, or who do you go to? Who do you talk to? And how do you actually get over it? Because it's one thing saying it, oh, there's no mistakes, there's only lessons, but how does that actually happen in practice for you?
Well, that's a philosophical one. That's a topic unto itself. Um, so I describe myself as a positive person with an ability to have perspective.
Hmm.
And what I mean by that is um, things can always be worse. And I'll give you an example of what I mean by that. So at some point while we lived in the US, I had to get out of the US to renew the work visa. So I lived in Montreal for a few months. My wife and the two youngest kids were in Arizona, and I couldn't travel there, just waiting for the permit to be, the visa to be issued. And so I didn't see her and the kids for a few months. And people were asking me, well, how can you be so happy when you're away from your wife? I said, well, I could be with my wife and she could have cancer, so I'd rather be away and she's healthy, right? So I have a fairly good dose of perspective. And if I feel I make a mistake, or I would say, it's not the mistakes. If I don't make the right decision, or there's something that I haven't seen coming, then I get up and I fix it. And again, back to adversity and being a source of motivation to do good. And at the end of the day, well, I was also, I'm wearing this ring here, and on it says, the outside's in Hebrew and the inside is in English, and it says, "This too shall pass." Right. So it's a very well-known saying. It's very philosophical, and I live by it. So you get up and you make a mistake, or you make the wrong decision, and it negatively affects you. Well, this too shall pass, and there'll be a better day. Just like, if you're a mining executive, CEO of the company, and your stock's flying, and everybody thinks you're the greatest mining stock in Canada, well, this too shall pass too, right? Most times. So it's kind of a philosophical approach to life, which is, nothing's permanent, and if you make a mistake, or you take the wrong decision, just own it and go fix it.
Does that tie well into your personal values as a person, if you will? Like if you would make a list of the like three things, so you say, this is me as a person, and those are three values that I'm not gonna break no matter what. I mean, money or whatever else is involved, I'm not doing that. What are those three things for you?
Do not commit adultery, do not steal, and do not bear false witness, right? So that so it's very, yeah, I mean, listen, I like to live a life of integrity. So those are the things. So I remember when I was in Montreal, and as part of my activities, I was running a subordinate debt fund, and I had an independent board of directors, and one of my directors was chairman of Air Canada at the time, and I asked him what he felt was the number one quality of a CEO, and he looked at me. He says, integrity and honesty, and I went, okay, that's not what I expected him to do. I thought he was going to talk about sort of business qualifications, but it stayed with me, and that's also true. Apply this in my personal life. People look at me a certain way, right? And so your viewers are going to say, well, he declares himself to be a family man with a big, large number of kids and grandkids, but is he really that? And that's what I am in private, just like I'm saying in public now. So, look at it in the micro level. My kids have a view of their dad, which is a good dad, and he's very respectful to our mother. So is that true or not? Right. So, and to me, it needs to be true, because it is true, but it needs to be true because you need to live a life of integrity.
Well, I'm glad you brought that question up that way. Like, well, what does it take to be a good mining or an exploration executive? Because that's part of something that I wanted to ask as well. Is that you've raised a bunch of money throughout your career for different things. I believe it says somewhere that you raised over $1 billion in total. Is it different in mining? Like, do you think it's more difficult to raise capital for mining companies than it was for you to raise that $1 billion for during your career?
You know what? The larger financings for the larger companies are always easier. And I think that's true in mining. and in non-mining. So at the lower end of that, I would actually claim that it's more difficult to raise smaller amounts of money in the non-mining space.
Hmm.
And but it's hard on both. So, I mean, if you want to raise $30 million for an advanced mining project, and I can think about, one of our partners at Prismo, so Vizsla Silver, they're fairly advanced,
Hmm.
great economics to what they have. It's easier for them to do a $30 million raise than it is for us to do a $5 million raise, right? Because we're not at the same level and so on and so forth. But I would say it'd be even more difficult in the non-mining space. But at the end of the day, investors, they all mining, non-mining, they all look for the same thing. It's the management and it's the projects and the ability to package that up as a compelling investment opportunity and make a commitment that you're going to employ all of the best technical people and techniques, and that you're going to do a good job marketing yourself as a mining company. Because, somebody that buys your stock at some point, it's like what I was saying about Paul Chalmers when I started, and the promoters is like, okay, I'm going to finance your company. I'll put $1 million in, 20 cents. How are you going to create value, and how are you going to let the market know that you're creating value?
Now, though, it seems like that's turned into how are you going to create value, and can you create it by next month? And the mining industry is notoriously slow in creating value, and it doesn't happen. Like I always say this, but failure is kind of the norm in this space, right? How do you deal with that? Again, mining industry kind of slow to give you results, and the investors want quicker returns now with tech, uh, bubbling as it is. So how do you balance the pressure from investors with the realities of exploration timelines, getting permits? Yeah, how do you deal with that in between?
Okay, so I'm going to say what I'm going to say. I think it might sound provocative, but the answer is I don't care what people think
Hmm.
in terms of expectation. And let me give you a couple of examples. Right. So um, we know that there are retail investors. Let's focus on retail investors out there who want to make they want to make money overnight, not over time. Right. The real money doesn't get made overnight, and gets made over time. And so their all investment philosophy is around, issue results, and hopefully the headline about the grades is good. Stock's going to go up, and I'll make my money overnight. And I know they're out there, and I talk to some of them, and I really don't care what they think, because that's not how to run a business. Another example that's more specific. So at the Prismo, we were drilling Palos Verdes in Mexico, our silver prospect. And it was a new part of the property we were drilling, and we couldn't find Palos Verdes vein close to surface. So we said, oh, well, why is that? And we had a bunch of results, and people were saying, put the results out, put the results out. And I was talking to the technical people, and they said, well, we don't know why that is. Why would we want to put results without being able to explain what we think is happening? And so we did a lot of surface geochemistry and so on and so forth. And we worked with Vizsla, who had encountered that in the west part of the district many, many times. And so we put all of the mines together, and then we issued the results with a logical technical explanation of what the result meant. Why would we have put out results that we didn't understand ourselves, right? So this notion that that you're describing, which is truly there, which is like, are you gonna, like we're starting to drill at Palos Verdes. I have people emailing me, did you start? Did you start? Did you start? Well, does it matter if I started last Monday or this Wednesday, right? It really doesn't matter. So I don't get engaged in those kinds of games. We don't. We want to do everything that's right geologically, technically, and the technical people will set the timelines, not the retail investors that are looking for a quick flip.
If that's not stressing you out, what is? Maybe you're just stressed. Maybe you just don't mind stress. But what do you think is currently the most stressful part of your job?
I think it's always the same, which is the timing of the financing and the terms and conditions of the financing, and if you're going to be successful putting it together. Because financing junior exploration companies is an art, right? And there's a right time, the right people, the right structure. Like I see people announcing financings that are not spoken for, right? And so first tranche, second tranche, third tranche. And by doing things that way, they focus just on intaking money, but they don't think about how much it has, how much pressure it puts on their stock, would end up giving the company more dilution than they should. So that's so if, do I get stressed by certain things? I do, and I think it's healthy because that keeps me focused, and that would be that. So I have a good track record in getting things done, but you're only as good as your last financing, right? So you have to be sharp, you got to be smart, and sometimes when you'd I'd like to have a drilling rig on Hot Breccia like a month ago, right? But it's going to be in September. But I think that is the right decision for the company. That's the right timing. People will be back from holidays, attract more investors, better shareholders, and so on and so forth.
Is that how you define success for Prismo or for your career? Like, is it doing from your perspective alone? But is it just doing good financings, or is it something else?
No, it's to find for me, it's to find the next resolution. Like guys like me, and guys like my partners, like McDaw and others, we've all made some money. That part is, I think, kind of you can check that box. It's okay, but really, that's not the only thing that drives us. It's so if I go around and I talk to people in the trade about my friend Peter McGaw, they immediately think about things like Max Silver won a CPO and other big discoveries. So I'd like to be part of the guys who 10, 15 years from now say, hey, these are the guys who found the Hot Breccia deposit, and now it's run by Rio Tinto or Freeport McMoran or something like this, right? So that's a much bigger source of motivation for, I can speak for all the guys at Prismo. That's a much bigger source of motivation than making the money. Now, if we do that, are we going to make tremendous amounts of money? Of course we will. But, the money is not an end to itself. So making these discoveries is very, very attractive. I worked in the oil and gas field as a founding director of two oil and gas companies, and then I was on the board, and I was a founding shareholder, and we successfully in the 90s built two companies, Key West Energy and Luke Energy, and we started. I think one was at 26 cents, sold it at like $5. 5 years later, created Luke at 80 cents and sold it at 6 3 years later. And it's these are money making events, but the thing that I really like is that we made money. Everybody made money because we sold both companies, and these wins are recognized by the investment community and those that were involved for a very long time.
So you know how to deal with successes. What would you do if and I'm saying if even twice, what would you do if Prismo couldn't continue to work tomorrow for some whatever reason, weather, permit, something else? Like what would you shuts down? What do you do next? How would that impact you personally?
Well, it's not going to happen. So so yeah, so you'd have to refine your question, Antonio, or rephrase it. Just
How do you deal? Yeah, how do you deal with an unforeseen situation? I mean, you're saying you're not gonna happen. It's not gonna happen. Nobody's hoping for that. I get it. But something happens, something that it's unimaginable to us right now. Nobody can conceive of it right now, but it happens. It's whatever. How do you deal with the situation on a specific basis, or do you, I mean, I don't know, break down and start crying? What do you do personally as a person? How do you deal when something unforeseen happens?
okay, well, okay. So I got an example for that too. So let's talk about Beyond Lithium. Beyond Lithium is something I was a co-founder of, and took the company public with a qualifying asset 3 years ago, maybe. Pivoted early last year into the lithium space. We became the largest owner of lithium exploration properties in Ontario. Made two significant discoveries. One, the discovery of the year in Ontario last year for one of our discoveries. On and on and on, like success after success after success. But nobody cares about lithium. And so the stock went from 50 cents last fall to like 4 cents today. And we still have properties, we still have the discoveries that we have. It's a great valuable thing, but nobody cares about it. So what am I going to do? Well, I'm going to fix it. And what does that mean? Well, fix it partly, to me, it means two things. One is preserve what's there because these assets are very valuable, although investors see no value. But per se, they do have value. They're large spodumene discoveries in some of the most attractive parts of Ontario, close to infrastructure. So preserve that. Number two, probably pivot into some other more attractive commodity, because if you're going to run a exploration company, you got to have a commodity in there that people want to finance. And so we're evaluating all of these things. And so you could say that in the face of adversity, in the case of Beyond, as I said earlier, you roll up your sleeves, you go fix it, you do something about it. And at the end of the day, one lesson I learned is people will always most people will end up forgiving if things don't work out. They'll never forgive getting screwed. But, they most invest, certainly the more sophisticated one, they know that. So, okay, so you were in lithium, you made two big discoveries, and nobody cares about lithium a year ago. So people are ready to forgive for that kind of stuff, right? But guys like me, and my partners and Beyond, we just roll up our sleeves and go fix it.
How do you, if that doesn't happen, how do you foresee the next, let's say, 10 years? And I suppose that's a kind of a cliche question here as well. But when you go to a job interview and people ask you, what do you see yourself in 5 years? What do you see yourself in 10 years? Let's say that doesn't happen and success happens for you. What does success look like on a 10-year time frame?
Well, so I've had success. I continue to have success, and I'll define what I mean by that. So 10 years from now, I need to continue. I need, yes, it's a need, to continue to have successes. So what is success? Well, you get joy from whatever you get joy from in life. Um, if you look at Prismo, um, we we took a 22 hectare asset and leveraged it into $5 million of investments over 50 cents. A strategic relationship with Vizsla Silver, um, got enough capital to bring one of our properties, Los Pavitos, which is a large gold prospect in Sonora State, from grassroots to the drill stage, and to acquire the option on Hot Brecha. To me, that's huge success, right? And especially the relationship with Vizsla. Everybody told me, well, why would they do that? Da, 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 da. And you say, well, you got to try and see if it happens, and it happens. And so that's a very valuable relationship for us. To me, that's great success. So I get success, on a regular basis. As I said, the ultimate success would be to have my name associated with one of the largest copper discoveries in North America, which happens to be in Arizona. Now, I'm telling you this today, but let's say, it happens this year or next year, then maybe there'll be something else that I'll need, that I'll want. Okay, I got my name attached to this discovery now. What's next? It's probably what's going to happen, because there's always a what next, right? And that's what you want. Like, if people invest in junior mining companies, and you and I have talked about this in the past. You need to know who's looking after your money, because it is your money as an investor, and how passionate are they at doing the right thing to advance the projects, as opposed to lining up their pockets. And so and in the case of Prismo and beyond, everybody's heavily committed to success, and the ultimate is what I described, but it takes a lot of luck for that to happen, right? So to find the next resolution in Arizona, you have to have Mother Nature on your side. But the little successes, as the one I described, those are the ones people should live with, right? So it's like, not everything needs to be a grand slam, a single, a double, or a triple. If you don't get pleasure out of those, I think there's something wrong with you.
Is part of that going to be investing your own money on the exchange, like the rest of us regular folks?
Well, I do. If you look at my SETI, I think somebody was making the comment. I think I spent 150 grand, something like that. I could be wrong by 10 grand or so, but in the past year, buying Prismo stock out of the market. So I mean, I do that. I will continue to do that. I participate in the financings. No, so I mean, there might be other projects in the future, Antonio. But first, I got to turn around beyond, and we got to land something in terms of a strategic partner, Rod Brecha at Prismo.
Do you do that? Do you spend because you said someone made a comment online. Do you spend a lot of time online, or again, kind of paying attention to what the market is saying, what the market wants from you?
A little bit. I don't like it that much. I don't know, but I do, to get somewhat of a feel. I find I spend much more time being proactive and creating content for people to see on the internet. So if you look, as an example, at our YouTube, we came up today with 1 out of 4 small videos that we are using to explain our Hot Brecha project. And you might say, well, everybody knows Hot Brecha. Well, yeah, of course they do, but selling somebody about what you're doing takes a lot of repetition. So we're very keen in creating social media content and sharing it with both existing shareholders and new shareholders. So we've got this series of videos. That the first one that we put out, and you should look at it. So it's with Dr. Linus Keating. It's at Hotbracha. It was filmed on Hotbracha. It's 4 minutes, 5 minutes long. So it doesn't take you away from your daily tasks, and it's a different perspective on our project. And I say different perspective because it's sort of a new guy for most investors, but he also worked for Kennecott when you used to have the property, and he's seen the cores and so on and so forth. So I'm much more of a guy who wants to create relevant content for my audience, as opposed to look at what my audience is saying and what they think they'd like to see, right? If there's a lot of criticism about something, yeah, let's address it. Sometimes we're proactive. So if people say, well, why didn't you publish this? And, so sometimes we can be proactive and give an explanation. But I'm much more interested in being consistent and providing great content to people than addressing individual preferences as to what we should be doing.
Well, hopefully that's where I come in, and I get to be annoying to you with some of these things and some of these criticisms, and I get to ask you about these things in the future.
Well, you're not annoying. You're not annoying at all. I think, and that's why we're doing this, right? Because I think you render a service to people, and you give, like a guy like me. I mean, we've been going on for an hour 8. We can do another 2 hours of this, but you interview a guy like me and others, and I see your content, and you're not annoying at all. You actually ask questions and let people speak, and so it allows all sorts of people from all sorts of walks of life to share their views on certain topics with your audience. And hopefully it's growing by leaps and bounds, because if your audience, it consists a lot of people who want to invest in junior exploration, then everything you're doing should be looked at very value add to them. That's partly why I'm doing this, because I think that I have something relevant to say and experience to share, which will hopefully, even if they pick up one thing out of an hour and a half that makes them a better investor, then you and I have achieved something good.
I really appreciate you saying that, because I'm trying. It's by far not without effort or whatever. So I appreciate when people see it. So thank you for saying that, Alain. And it's been a pleasure. We can go on for 2 hours. There's a bunch of other questions I could ask you. I do want to let you do your thing though. But not because we've gone through the fire round, which I wanted you to be lightning round, actually, which I didn't tell you about because I wanted you to be unprepared for it. So, but I basically have 10 questions there, multiple choice questions, if you will, and you get 3 seconds to answer to each question. You ready?
Ready.
Coffee or tea?
Coffee.
Mountains or beach?
Oh, mountains, man.
Football or hockey?
Hockey.
Books or movies?
Ooh, that's a tough one. Movies.
Early bird or night owl?
Early bird.
Beer or wine?
Wine.
Adventure travel or luxury resort?
Adventure.
Steak or burger?
Toss up. It's a toss up. Okay, I'll go with steak.
Dogs or cats?
Neither.
What then?
Okay, well, wait. While the kids were growing, we did have a dog, so I'll go with dog.
Is there something else, a fish or something that we don't know about? Birds, something exotic? Do you have a lion,
fish,
don't you?
We did have fish, but
you look like the kind of guy who would have a lion or a target. I don't know, or a tiger. This is actually a geo question. The next one, we're not there yet, but geophysics or geochem?
Geochem.
And then Toronto or Vancouver?
Vancouver.
Bonus one, what kind of car do you drive?
Jeep Cherokee.
That's it. That's it. That's the pot. Thank you so much for doing this, and I really appreciate you stopping by. And hopefully we can do an update on Prismo anytime soon.
Yeah, I appreciate it. And again, on behalf of all your listeners and viewers, I encourage you to keep doing what you're doing, Antonio. I think you're doing important work.
Thank you so much for saying this. I really, really do appreciate it. And thank you so much for sitting down with me.